Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading of France L'Aqua in London with Tom McKenzie.
And here are your top stories. Deal at hand, the US and EU near agreement to wean Europe off Russian energy. That's as Putin demands payment in rubles. Biden meets allies in Brussels today. The Treasury sell-off resumes after yesterday's recovery. European and US equity futures gain after yesterday's sell-off. Russian stocks rise in local trading after a record shutdown. Plus, a mixed reaction to Russia's invasion of Ukraine among emerging markets. This hour, we speak to South African President Cyril Ramaphosa, who has not condemned the war.
Now, let's take a look at the markets. Tom, futures actually pointing to a higher start when you look at the European stocks 600, gaining some 0.2%, similar gains for the DAX futures. And of course, markets are trying to figure out, when we speak to a lot of Fed officials, you know, the fact that they're not shying away from hiking rates to deal with inflation, what it means for growth, and of course, what it means for the bond market.
Yeah, and continuing to watch, of course, energy prices as well. And Brent has been fluctuating just in the last hour or so. So that is a factor as well that's being weighed up by these markets, as well as, of course, that broader picture around central bank action. The Spanish IBEX opening up 0.3%. The FTSE 100 is currently range bound. Again, the losses yesterday not being made up so far, just in the opening few seconds of the trading session here. We'll see how this unfolds, particularly as meetings continue. President Biden set to meet NATO, then G7, then European leaders as well. A packed agenda for the US president before he moves on to Poland tomorrow. In terms of what's happening across the CAC 40, the French index is gaining 0.2%, up 11 points. Let's move it on. The big story today as well across these markets, as we said in the headlines, Russia opening. The Russian market's opening with all the caveats that are in place. This is not a usual trading day. It is the first time they've opened in about 4 weeks' time. There are restrictions on foreigners, the inability to sell and move their money overseas. Just 33 stocks being traded, and reports as well that the Russian wealth fund is coming in to support the picture and the equities there. So within that context, you're seeing gains of close to 9% for the benchmark MOEX over in Moscow. The future stateside pointed to gains of 0.4% after losses of more than 1% yesterday. And in terms of that sell-off in the Treasury space, that continues. 233 on the US 10-year. The 5-year yield is higher than the US 10-year. Currently, you're seeing an increase of around 5 basis points in terms of that yield on the US 10-year. Brent at 122, gaining 0.5%. Again, it's been fluctuating in the last hour. Francine.
Tom, if you look at the sectors, and if we dig a little bit deeper into those, it's very clear that utilities, retail, energy on the higher side. Of course, energy is also on the back of the fact that Vladimir Putin yesterday was suggesting that he wanted to be paid in rubles. Does it mean that we can no longer import LNG, oil and gas, from Russia? That sent prices higher of gas prices, for example, so it's giving a lift to energy prices and therefore to energy stocks, gaining some 0.3%. In fact, if I'm looking at the sectors, Tom, there are only 4 on the downside. That's financial services, auto parts, media, technology down some 0.4%, and that's your biggest loser in terms of sector-wise. Let's also look at the stocks, Tom.
Yeah, some of the individual names in focus. Renault, massive pressure, of course, on Western firms that are operating in Russia. Renault coming out and announcing that it is going to be suspending production in Russia. We know other companies under pressure, including Nestle, from the likes, of course, of none other than the Ukrainian President Zelensky on that company. Renault, though, pausing production. They're currently stock down 1%, 24 basis points for that company. Next, cutting its guidance on concerns over inflation. That persists, but but also the war in Ukraine. The stock up more than 1% in just the first few seconds. And of course, you were talking about energy, Francine, just to reiterate, up 0.5% across the Stock 600 energy complex. We continue to monitor that. And the expectation, Jake Sullivan on Air Force One telling reporters that you may get a deal by the end of the week. Okay, Fran.
Yeah, Tom, so let's get over to our Bloomberg MLive managing editor, Mark Cudmore. Mark, you're looking at European gas. So first, we're expecting the EU to maybe come up with some kind of cap or something like that. But then we need to see whether Putin really wants to be paid in rubles and who's prepared to do it.
Yeah, absolutely, Francine. I think, what the Europe's been discussing is the long-term plan to wean themselves off the dependency on Russian gas. But we've got quite an immediate problem from exactly as you mentioned, Putin's demand to be paid in rubles. Now, one of the big themes the past 6 months has been the European energy crisis. And this is a chart of the 5-year seasonal average. The white line is the 5-year seasonal average of European gas inventories. The green line is the highest the past 5 years. The red line is the bottom. Now, you can see that this was actually below the worst of the past 5 years. We're still way below the average. We've got a little bit better recently, but overall, this has been the real kind of theme of the last few months. Now Putin is suddenly demanding payments for gas in rubles. This is a real problem for Europe because they have a political hot potato in terms of energy prices and the domestic inflation problem. They can't afford for gas prices to get much, much worse in the short term. And remember, it's only next Friday that UK gas prices will go up 50% overnight because the gas cap gets removed by regulators. So this is a really, really big issue. They can't let it get worse. And yet, can they be seen to accede to Putin's demands to facilitate the support of the ruble by paying for it in ruble? So I think that Putin has really escalated the tension. And I want to move here to a full screen to show why it's such a big issue. This is a chart showing where Europe gets its imports of gas. Thank you very much. And you can see it gets over 40% of its gas from Russia. Now, this data is 2019. It's the last year we've got full, accurate data on. It has declined a little bit since then, I believe, but not by much. It's still pretty close to the 40% mark for Russian imports over the last few years. Dwarfs everything else. Basically, Europe cannot turn themselves off Russian gas. So the only solution here is they have to compromise and play in ruble or Putin's going to back down. Has he shown much sign of backing down yet? I don't know, it's a tough one.
Okay, Bloomberg MLive managing editor Mark Cudmore on the complexities of how Europe could try to address its dependency on Russian oil and gas. We just saw in the last few minutes President Macron of France, of course, arriving at that NATO summit. We know it's going to be a packed agenda, Francine, of course, for Joe Biden and his allies as they meet NATO, G7, and then European leaders.
Yeah, it was interesting. So I was in Italy yesterday at the Market Capitals Forum, and there was a belief that actually these next 2 days, first of all, President Biden here possibly talking about sanctions, but also the EU summit. Let's not forget that they could find some kind of repricing on gas, if most people agree, could be a defining moment in terms of the economic war that's also ongoing.
And to what extent can the US really step up and help Europe with its own gas supplies? We'll watch that as well. President Biden then is in Brussels, as we mentioned, of course, ahead of today's NATO summit for a marathon day of international diplomacy. The US president looking to reassure allies and increase the economic pressure on Russia. For more on the geopolitics and the market consequences, we've got our Europe correspondent Maria Tadeo on the ground in Brussels and our markets editor Christine Aquino here in the studio. Maria, let's start with you. This trip then, symbolically important, but what can the US actually get done in practice?
I mean, symbolically, Tom, this is a huge day of international diplomacy. The United States, but not just the U.S., we should stress also NATO members and European countries want to put together a show of unity ahead of or in front of a Russian invasion that continues now for a month and shows no signs of stopping for the time being. Now, there's two big issues happening today. On the morning today, now, of course, with the NATO meeting, there will be a very real conversation about military spending, but also how much should we be spending on this. Remember, there's always a perennial debate around the 2%, but this time, President Biden may get a real hardcore commitment about spending 2%. Then there's also two countries in particular that you have to focus on when you look at NATO. One is Poland. Of course, they are the main hub for weapons that get delivered to Ukraine. And then you have Turkey. There has been a real debate about whether or not Turkey should be the country to mediate here. And then, of course, in the evening, this becomes a European conversation on energy. And like Francine said, you have to separate today from tomorrow. Today, the Americans will say we want to help in the medium term, but the concern is from now until next winter. And that will turn into a thorny debate on Friday. There's many ideas that have been floated around in Europe, but none of them seem to have consensus for the time being when it comes to should we unplug or unpeg the electricity price from the gas price? Should we go for joint purchases, joint storage? All of this is still very much up for debate.
Yeah, and it's extremely difficult. We also remind our international viewers it's extremely difficult given how much gas and LNG and oil Europe imports to actually wane off this Russian gas. Now, the other interesting thing is, over an hour ago, we had Russian stocks, Christine, finally reopen. Now, it's limited in trading, limit downside, and of course, the number of people that can trade it. But what did it tell us?
Well, Francine, I think there are really big questions, actually, over whether this price action, seemingly buoyant at the reopening after a record-long shutdown, does that really reflect the sentiment on the ground, or is it all a farce? I mean, we've already seen the White House commenting on this, criticizing, of course, all the limits placed on trading and the fact that there are only a limited number of shares trading. We're also seeing some comments from investors, again, pointing out that it's difficult in this sort of market to really find true, genuine price discovery, and that really is the main criticism at the moment. But on the surface, of course, the fact that finally Russian markets are reopening, all of its assets, stocks, currencies, and bonds are trading certainly marks a bit of a shift from the start of this month.
Okay, Maria, that's from the Russian markets to a question now about NATO and the military. We heard from Jens Stoltenberg a little over an hour ago addressing the press. What can we expect when it comes to the NATO alliance and how aligned the US president is with his European allies on that issue and the question of bulking up that response?
Well, Tom, we're about to see, but the impression that we have is that today we are going to get an announcement on military spending, a clear commitment from member states and members of the alliance to step up to that close to 2%. I mean, they have to in many ways. When you speak to Eastern European countries, they really tell you they fear a very aggressive Russia that could be a problem for them too. Remember, the concern here for NATO members is that this war in Ukraine could potentially spill over into NATO countries. If you look at a map, well, Poland and Ukraine, they're fighting a war that's very close to the border that could get problematic in the future. The other big issue, of course, today we're probably going to get another commitment about the U.S. forces deployed always under the NATO umbrella in the eastern flank. Remember, we've heard repeatedly from the prime ministers of Estonia, Lithuania, Latvia, but also Romania, Poland, that they want to see more troops on the ground, but also they want to see a military deployment that is sustained and longer in time in nature. So in many ways, Tom, you could argue this war has already changed the face of European defense.
It certainly has. Maria, we're seeing a lot of the leaders arriving there for the NATO summit. About an hour ago, the first one to come in, of course, the master of ceremonies, the NATO Secretary General. A short while ago, we had Emmanuel Macron of France, and now we have Justin Trudeau of Canada, I believe, speaking in French to a lot of the press and reporters gathered there. Christine, when you look at the markets, so of course they look at inflation, of course they look at raw materials, but actually the bigger question is what the Fed does when we have also more than one official calling for a 50 basis point hike. Does it mean more volatility as the markets try and find a floor?
Definitely, Francine. I mean, I think what we saw this week alone in bond markets, the price action really is the path of least resistance for yields at the moment is very much higher at the moment. And it seems like there's very little to stop that momentum, especially when you consider the fact that actually markets haven't even priced in fully the idea of a 50 basis point rate hike in May, for instance, or they haven't also gotten on board with the idea of more Fed rate hikes down the line. I think we're pricing less than 8 rate hikes at the moment. And so the markets haven't really gotten on board with this message, but the message has been coming on very strong from a lot of Fed officials. So there's still a bit of discrepancy there, potentially room for those yields to ramp up higher. But then on the other side, of course, what the bond markets are doing is kind of a little bit doing the Fed's work for them in a way, because that move, of course, in yields higher tightens financial conditions and does a little bit of the legwork for the Fed. So that could argue maybe they don't have to do as much as they're indicating. But certainly a lot of two-way risk here as markets continue to digest all of this.
Christina Kino, as ever, thank you very much for walking us through the key market themes and, of course, on the ground with the geopolitics, Maria Tadeo in Brussels ahead of that NATO summit, followed by G7 and EU meetings as well. Coming up, global bond markets have suffered unprecedented losses, as we've been discussing, since peaking last year. We'll focus on that in more detail. Fixed income, that is next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 15 minutes into the European trading day this Thursday. Range bound across the European stock 600, the benchmark. We've got some redheads crossing the line now. Just to flesh out the picture when it comes to the Eurozone economy, and in particular France. The French March services PMI rising. So it's a beat versus the forecast for the services PMI for the month of March, 57.4. The forecast was 55. It is a miss, though, when it comes to manufacturing, 54.8. The forecast was for 55.1. So a divergent picture there between manufacturing and services in France, Francine.
Yeah, also diverging pictures when it comes to, of course, global bonds and stocks. Global bond markets suffering steep losses since peaking last year as central banks, including the Federal Reserve, look to tighten policy to combat surging inflation. Well, we're back. We're joined by Stephen Isaacs, chairman of the investment committee at Alvine Capital. Stephen, great to have you on the program. Thank you so much for joining us. Are stocks too complacent on warnings from the bond market?
I don't think so. I mean, I think we've got to kind of stand back here and just look at the direction of travel over a longer period of time. And I think the COVID crisis followed by the war completely upends a generation of investing where we've been used to globalization and hence strong disinflationary forces, and also the politics of essentially some sort of fiscal restraint. Both of those two big drivers are now out the window. We have a messy deglobalization, driven now by an external supply shock. I mean, it's all very well for Western politicians to say that they'll bring in LNG from the US or elsewhere, but simply there just isn't the possibility. There aren't the refiners, there aren't the discharge points. So you can't just turn your supply chain management by 6 months. And then secondly, perhaps more importantly, the politics has changed. I mean, the headline in the Daily Telegraph this morning referenced the Chancellor's spring statement is fiscal measures thrown overboard. We'll hear today, no doubt, big commitments on defense spending. We may hear European rearmament bonds. So that the fiscal side is literally full on, stimulating the economy and trying to somehow protect the consumer from much higher costs generally. So that is the broader picture, and I see on a 5 to 10 year view that inflation is going to trend high, interest rates are going to trend much higher, and that's a huge challenge for investors.
Yeah, Stephen, and on that challenge and on the question of central banks, can equity markets weather possibly 250 basis point hikes this year? Even the Doves are looking at 2.5% by the end of this year. Bullard wants to see 3% by the end of this year.
Well, we're going to have a lot more volatility. I mean, if you go back to the 1970s, essentially that is the playbook, you had a huge amount of volatility in interest rates and a huge amount of volatility in equities. So in the very immediate future, it's right into the teeth of an aggressive funds rate increases. As you said, we're now talking 50s, maybe 100s even will be banded around. It's quite possible that the equity market will stall out. But if investors want to protect their portfolios, think medium term, there really is nowhere else to go. You have to buy assets that have pricing power. If you have fixed income, if you have multi-credit, you're going to have a real problem. And that's the focus. Interestingly enough, yesterday, Russian market reopened. Russian investors knew something. To say they're in a crisis would be an understatement. But there they knew that inflation is their enemy. And somehow another Russian investors knew something. So that would be my advice here, is that like it or not, we're in a very, very different investment.
But Stephen, what does a policy mistake from central bank look like? So if you look at inflation, are they focusing too much on inflation and not looking enough at growth? If you put the mandates to one side, they still have to manage this economy that's extremely reliant on Russia.
Well, I think as you said, you can't actually put the mandates to one side, if you'll excuse me there. I mean, the Fed has a dual mandate, so the Fed will tighten for a while, perhaps get to 3% by this time next year, but then it will be faced with probably a recession. And the Fed has a dual mandate for employment, as you know, and that means they'll start cutting again. That's really what happened in the 1970s. We had rates went up immediately after the oil shock. They went up to 10% plus. Then we had a big stall out in the economy, and they started cutting aggressively, always had to 4%. So we had a huge amount of volatility. The Fed's got a very difficult job here, and everybody would accept that one. There is no magic bullet here. What does it take to really squeeze out inflation? What does it take to get back to the investment environment that we all knew, that we've known for 20, 30 years? It would take an enormous amount of political resolve from politicians, the populace who put the politicians in power, and then the central banks that work within that mandate. And I don't see that at all. So it's going to be messy, it's going to be volatile. The dual mandate means that sooner or later, as the market is in fact seeing in 2023-24, there will be cuts again. Now, those cuts will unfortunately mean the Fed gets further behind the curve, which is my central thesis here, as they did in the 1970s. They stay behind the curve on a long-term basis, which meant that inflation became systematic. That's where we are at the moment.
Okay, the risk of systematic inflation, the Fed being behind the curve, and the messiness of these markets. Stephen Isaacs, chairman of the investment committee at Alvine Capital, thank you. And coming up, Russia's highly regarded central bank wanted out over Ukraine, but Putin said no. We will bring you more on our Bloomberg Scoop next. This is Bloomberg.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Welcome back to the Open. As world leaders gather in Brussels, Bloomberg has learned that Russian central bank governor Elvira Nabiullina tried to resign after President Vladimir Putin ordered the invasion of Ukraine. Nabiullina has not commented. Putin denied her that request, is our reporting. Joining us now is Scott Johnson from Bloomberg Economics. Scott, what does this tell us then about Russia's decision ultimately to go to war and the central bank's place within that decision-making?
Oh, thanks for having me on. I mean, it's obviously a show of dissent at a very high level of government. And that reinforces the narrative that this has been a war instigated by Vladimir Putin, as well as a relatively small number of advisors within the Kremlin and the security establishment. But I think, sure.
Scott, I think so. We need to actually, Putin does not tolerate dissent. So what do we know behind her decision? Is it because she's against the war, or is it because she couldn't prepare the economy for possible sanctions and backlash?
I think it's very tempting to read into a dissent against the war. We actually don't know that at this stage. There have been rumors about this attempted resignation for some time, and so I think the fact that it's getting out suggests that there's a desire for it to be expressed. But whether it's dissent against the war or a recognition that the economic framework that she has spent years building is now coming very quickly unraveled. I think it may be that to some degree. She's also built up experience and a skill set that is not entirely practical in this case, with the central bank losing some of its reserves or having the reserves frozen at least. Strict capital controls as well.
Yeah, I mean, who does have that skill set? I guess it's a question. Maybe bankers in North Korea or Iran. When it comes to the centrality of her within the reforms that we've seen up until this point in Iran, just underscore for us how important she was, particularly with the outreach to Western counterparts.
Sure, but she's been instrumental, and I think when you look at why it's important for her to stay, there's no one else in Russia that I think you would want to be at the head of the central bank right now. Over the last, really, if you look back since 2014, many of the reforms that have been implemented have been driven by Governor Nabiullina. Yeah. So we've had the credibility of the central bank as an inflation targeter, but also as a backstop to the financial system. She has helped to build that up. She's also been instrumental in cleaning up the banking sector.
Yeah, Scott, thank you so much. I mean, we could talk to you about this for an hour. She was really one of the most well-respected, actually, central banks in the G20. Scott Johnson there from Bloomberg Economics. Now, coming up a little bit later on the program, we also speak exclusively, our Manus Cranding will speak exclusively with the South African President, Cyril Ramaphosa, live in Johannesburg. We'll be talking about the country's economic outlook, its reaction, of course, to Russia's invasion of Ukraine, one of the only big countries that, for the moment, has not condemned that invasion, apart from China. So don't miss that exclusive conversation. It's coming up shortly, and this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories.
Deal at hand. The US and EU near agreement to wean Europe off Russian energy as Putin demands payment in rubles. Biden meets allies in Brussels today. The Treasury sell-off resumes after yesterday's recovery. European stocks gain after yesterday's sell-off. Russian stocks rise in local trading after a record shutdown. Plus, a mixed reaction to Russia's invasion of Ukraine among emerging markets. Very shortly, we're going to speak to South African President Cyril Ramaphosa, who has not so far condemned Putin over the war in Ukraine.
Now, Tom, U.S. and European futures are actually rising. Treasuries extending their slide. Of course, investors weighing the risks of rising inflation, the impact of the war in Ukraine. And then you look at oil, and I think a lot of the speculation is what happens to gas prices, oil prices. Are we going to pay in ruble? Who can do it? And if you actually wanted to pay in ruble, is that circumventing sanctions? And how do you get your hands on ruble? So many questions, very few answers.
Absolutely. And of course, you had that conversation with a key economic advisor to Mario Draghi, who said, we're not prepared to pay in rubles. We continue to watch this. Jake Sullivan, National Security Advisor to Joe Biden, of course, saying that there could be a deal between the EU and the US to support further measures to reduce that European reliance on the energy complex from Russia by Friday. Continue to watch that, of course, as the meetings unfold in Brussels. The European Stock 600 gaining 0.2%. The DAX is up 0.4 by 52 points, and the FTSE 100 is up by 0.2%. Let's switch it over and see how things are playing out across the sectors then. Top of the list, you're looking at utilities gaining 1%, followed by consumer products, food and beverage. Bottom of the list, some of those sectors that are in the red this morning, retail, banks and media all down just between 0.2 and 0.4%. Retail at the top of the list in terms of your losers, down 0.4%. We continue to watch, of course, the bond markets. That sell-off, as we said in the headlines, continues. 233 for your US 10-year, yields up by about 5 basis points as things stand. Francine.
Yeah, moments ago, we also had a decision from the S&B leaving policy rate unchanged. What's interesting is that the Swiss National Bank is actually, Tom, getting a pretty rare opportunity to enjoy the benefits of a strong exchange. So in the past, they would have been really uneasy about it. But at the same time, of course, it keeps a lid on inflation that's troubling many other people in the world. So I think we have a look at Swiss franc. Certainly that S&B pretty much, expected, actually completely expected. I think all economists were expecting it to be unchanged. And you see also some of the headlines coming in. They see inflation exceeding 2% in 2022. But of course, a strong exchange rate helps them with that.
Yeah, Thomas Jordan, of course, previously had threatened, or at least threatened possibly over-egging it slightly, but had suggested that intervention remains on the cards if the currency remains at heightened levels. It's weaker now against the euro by about 0.2% at 1.02. Let's get back to what's happening then on the ground in Brussels. US President Biden is in the Belgian capital to meet with his European counterparts and attend the NATO summit for a marathon day of international diplomacy. That's as Washington and the EU come closer to a deal to cut the bloc's dependence on Russian energy. The US and allies are looking to further isolate, of course, and punish Moscow for the war in Ukraine. For more, we go to Maria Tadeo and Anne-Marie Horden in Brussels. Aggie Cantrell, who's on the ground in Poland. Anne-Marie, good morning. Welcome to Europe. Welcome back. What can we expect then from the meetings from the US perspective? What is on the docket for President Biden?
Thanks, Tom. Well, it's great to be back in Europe. And just to my left of me, that is where we're going to see President Biden arrive this morning as he meets with his NATO leaders, as well as the G7. And then later today, he'll be heading over to the European Parliament to meet with the EU. So 3 back-to-back summits today, a day of diplomacy. What we expect from the United States, according to Jake Sullivan, the president's national security advisor, briefing reporters yesterday on Air Force One, is that we will get further sanctions from the United States on the Kremlin. This will be oligarchs as well as a number of lawmakers. The Wall Street Journal had reported that as many as 300 of Russia's State Duma will be on that list. And then also you're going to see a lot of diplomacy when it comes to a potential deal when it comes to energy security for Europe. This is something that is incredibly important for Europe because they have yet been able to really turn off the taps yet when it comes to fossil fuels from Russia. And this is something the United States wants to be able to aid in their help.
Anne-Marie, I look forward to, of course, all of your reporting as you were traveling also with President Biden. Maria, you were just outside the European Commission Council building. Now, Russia has been hinting that it will retaliate to energy sanctions by, for example, asking some of the unfriendly countries, as they say, to be paid in rubles. Even with the support of the U.S., how tricky is that going to be if there's not a complete overhaul of gas prices in Europe?
Well, Francine, it's incredibly difficult, as you know very well. Yesterday, we were in Italy. You heard it from an Italian official saying we're not going to pay in rubles. That is not the terms of the contracts. There is no appetite in Europe to renegotiate any of these contracts with Russia. And speaking to an official just a few minutes ago here in Brussels, well, he told me the reason why Vladimir Putin is doing this, of course, is because he wants to prop up the ruble. He needs that money, and essentially he's not putting us in the corner. But there is no appetite at this point from the European Union to follow through on this threat. The other big issue, Francine, as you know very well, when we talk about the energy market in Europe, the reality is there isn't one. Right now, there's 27 different countries that have 27 different systems. And even if the United States today comes up with a roadmap to cut the reliance from Russian gas and oil, the reality is it cannot be done overnight for many countries in Europe. Particularly, again, I really want to stress there isn't a European energy market at this point. They're working at it as we go, but there isn't a cohesive strategy for the time being. And we're expecting, by the way, a very tense discussion among European leaders on Friday in terms of what to do with electricity, what to do with gas, what to do about joint purchases and joint storage, because they don't worry about 2 years down the line. They worry about next winter that is coming up.
Aggie, let's bring you in at this point. President Biden expected to arrive in Poland tomorrow, traveling to Poland. Of course, the proximity of the war, very acute for the people of Poland, the government there, and of course, the country that's taken in the most Ukrainian refugees to date. He's going to be meeting with President Duda. What message is he likely to hear from his Polish counterparts?
So there's clearly an indication from Poland that they are one of the most hawkish of the EU countries against Russia. They see Russia not only as a security threat on their border, but actually a security threat to them as well. They see, even though Poland is a NATO member, they see the fact that some of these airstrikes have come very close to the Polish border as a real strategic and security concern for themselves. And we are seeing more NATO troops being committed to Poland as well as other Eastern European countries. Stoltenberg was talking about the bolstering of the eastern flank of NATO, and Poland is a key player in that. And so it's expected that when Biden and Duda meet in the coming days, they're going to be talking about exactly what sort of security can be offered to Poland as the country that is closest to Ukraine.
Aggie, of course, following all of the developments there on the ground. In the meantime, we're seeing a lot of these leaders, of course, as we're used to, coming into the NATO headquarters. We heard many questions, and I think the line of questioning from reporters is actually what's a red line? At what point does NATO get involved? If there's, for example, some attacks in Ukraine that go beyond what's by the Geneva Convention. Let's get straight back to Anne-Marie Hordern, who's been traveling with the President of the United States. Anne-Marie, what is the mood out there from the U.S.? I hear from a lot of European heads of state that they, of course, want to punish Putin, but we don't really know what the end game for these sanctions are. Does the U.S. want to send a strong message, or are they actually hoping and thinking that these sanctions turn around the war in Ukraine?
I think the United States continuously wants to send this firm message, but there's one thing, Francine, as you mentioned, these European allies alongside the United States, is the U.S. can go much further because their economy is protected in a sense. Not the same when you look at the European partners, especially when it comes to natural gas and the likes of Germany. There's just so far Europe can go in terms of sanctions, harsher sanctions against Russia at a point where it's going to start to really impact not just their own economies, but higher costs for consumers. We see a number of different deals being done with Germany's economy minister going over to Doha, trying to firm up some LNG deals. They're trying to loosen their hold on Russian fossil fuels. At the same time, the United Kingdom, the United States, Canada, they were able to ban Russian imports of fossil fuels. At this point, it is not the next step that Europe is able to take. And I think, Francine, this is going to be some of the tension we'll see throughout the day today.
Okay, Anne-Marie Hordern on the ground in Brussels alongside Maria Tadeo, of course, and Aggie Kantra, who's on the border in Poland. Just wrapping up and going through within the context, these important meetings, of course, between the US President and NATO and European allies, and how that leaves the discussion, particularly around weaning Europe off Russian energy. Coming up, we're going to speak exclusively with the South African President, Cyril Ramaphosa, live in Johannesburg. He is one leader who has not condemned Russia over its war in Ukraine. We're going to discuss the country's economic outlook and its positioning alongside Moscow. Don't miss that interview next. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Welcome back to the Open. We are 43 minutes into the European trading day. The gains have materialised across the European space, 0.4% of a percent, 0.3% across the benchmark. You're seeing gains of around 0.8 over in France and gains of a little over 0.5 over in Italy. In terms of what is happening in Brussels, the importance of that, of course, being outlined by Maria Tadeo and Anne-Marie Horden-Aggie just the last few minutes. But we're watching now as leaders come in and arrive in Brussels for the NATO meeting. Prime Minister Boris Johnson of the UK, as you can see, walking in as we speak. We've seen the Dutch Prime Minister earlier saying that they will persevere in terms of their actions on Russia. And we know, of course, that the Europeans and the US are trying to align themselves on how far to go to wean Europe off energy from Russia. Francine?
Yeah, Boris Johnson talking about, for example, the needing to tighten some of the economic visa around the Putin regime. I think he's talking about some of the things that the UK can do, but then he really says it's up to NATO to consider what the options are. Now, unless the US and its allies mobilize to save it, the second great age of globalization is coming to a catastrophic close. That's the argument made in today's Big Take, written by our editor-in-chief, John Micklethwaite, and Adrian Woolridge from Bloomberg Opinion. Well, Adrian Woolridge now joins us. Adrian, it's a great piece. You're a great master and student of history, so it brings us back to the other world wars. How does globalization now need to change to be able to survive this?
Yeah, we have to remember that now is not the first stage of globalization, it's really the second age of globalization. The first stage of globalization stretched from about 1870 to 1913 and came to a catastrophic end with the First World War. And then the leaders of the West after the First World War made the mistake of not relaunching globalization, of bickering, of creating the basis for tit-for-tat protectionism, which of course led to the rise of Hitler and Franco Mussolini and the rest of them. And what we argue in this piece is we mustn't make the same mistake again with the current war. We must, of course, win this war and stop Putin doing his the important things that he's doing. But after that, we must use it as a way of relaunching globalization, making sure that we deepen global trade, particularly global trade in the West, but also of addressing the problems of globalization, which of course have been growing, problems to do with inequality, with people breaking, with companies acting in a very self-interested way to avoid paying taxes, and of course with environmental degradation. So relaunch and revamp is our argument.
Adrian, do you have any sense that lawmakers have learned from history, that they are unwilling to make the same mistakes that were made back during that period of time? And what are the particular measures that you would outline that could address some of those issues to help rebuild capitalism, globalization after this event?
I don't think they have really learned from history. They're not really students of history. They're students of the moment, because we have the 24-hour news cycle. Everybody's thinking, just a short way ahead rather than a long way ahead. But the reason that we wrote this article was to say, please study history, because the lessons are extremely worrying. And as Mark Twain said, history may not repeat itself, but it rhymes. And there are very, very strong similarities between now and the First World War. The lessons we'd like them to learn is that whatever the problems are with globalization, and there are certainly problems with globalization, the alternative is much, much worse. The alternative is tit for tat, tariffs, is a shrinking economy, is destabilization, and a fertile ground for the rise of even worse dictators than we have at the moment. What we argue in particular is that the Europe and United States should try and have work on a free trade agreement to reinforce ties, trading ties in that group. We should also try and extend free trade to the rising democratic Asian countries, which has not really been done, and by tightening trading links between the democratic countries, we will create a zone of prosperity, which should attract in, I think, the autocracy.
But Adrian, how do you get India, how do you get China, how do you get even South Africa involved so that there is not a split in the world to have these, two opposing values?
A very good question, but you have to remember that the democratic countries represent about 60% of the world's GDP. They are very significantly more powerful than Russia and China put together, than the autocracies. They have an attractive value system. They're economically dynamic. So if we reinforce the ties between those countries and reinforce that economic dynamism, we will create something which is incredibly attractive to wavering countries such as India and South Africa. I think those countries would be, China has been wooing them very, very well over the last few decades, and we have been failing to do that, I think. But I think if we relaunch the dynamism of the West and get beyond some of our unnecessary self-doubts, I think we will be attractive enough to relaunch globalization and have some of the same dynamism about globalization that we had in the 1990s.
Okay, important analysis and well worth checking out on the terminal, of course, but also on Bloomberg.com. Adrian Wooldridge from Bloomberg Opinion on the threats, but also the opportunities around globalization as a consequence of this conflict. And as we speak, arrivals continue in Brussels for that NATO summit. And coming up, a month into Russia's invasion of Ukraine, US President Joe Biden set to meet allies in Brussels. We're going to get the details next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 52 minutes into the European trading day, and you can see a bit of stabilization for some of these equity stocks. The CAC 40 actually gaining some 0.5%. Now, the focus, of course, is on futures also in the U.S. They're rising. The dynamic between bonds and stocks is something that we really need to keep an eye on. And, of course, treasuries have been on the move. Investors weighing the risks of rising inflation compared to the impact of the war in Ukraine on growth. So we keep an eye on that. And then, again, the MOEX Russian index, very limited in terms of trading, only 33 stocks for 4 hours, no foreign investors allowed. So we don't know exactly what to make of that 8% rise, something that we need to keep an eye on, though.
Yep, US President Biden is in Brussels to meet his European counterparts and attend the NATO summit for a marathon day of international diplomacy. That is as Washington and the EU come closer, edge closer to a deal to cut the bloc's dependence on Russian energy. The US and its allies are looking to further isolate and punish Moscow for the Ukraine war. For more, we go to Maria Tadeo and Anne-Marie Jordan in Brussels, Aggie Cantrell, who's on the ground in Poland. Anne-Marie, let's start with you. Just get us up to speed on what we can expect from Joe Biden and how much support domestically he's getting from Democrats and Republicans to pursue the agenda that he's pursuing when it comes to Ukraine. What is the domestic agenda and how that's shaping the way that Biden looks at this issue and how that folds on to his conversations with European leaders? As I ask this question, by the way, we're seeing pictures of leaders continuing at the NATO headquarters in Brussels, including the President, Joe Biden. We'll continue to watch these pictures. But Anne-Marie, just on that question of the domestic support that Biden has for his policy stance on Ukraine and Russia.
Well, Tom, as you say, as we're speaking right now, to my left, you're going to see the president exit his motorcade as he arrives here at the NATO headquarters in Brussels. We should also note to my right, when you have all these flags of all the NATO countries, the American flag this morning is at half-mast for former Secretary of State, first female Secretary of State, Madeleine Albright, just to give you a sense of what the American delegation is walking into today. When you ask about what they want to get out of this, it's really twofold. They are going to announce another set of sanctions from Washington on the Kremlin. This is going to go against a number of oligarchs, big Russian tycoons, as well as some lawmakers in the State Duma out of Russia. And then there's also going to be a lot of diplomacy with Europe when it comes to specifically the energy question. Now, Jake Sullivan, the president's national security advisor, yesterday on Air Force One said there's not going to be pressure on Europe to cut the taps right now, but there is going to be a discussion. And he says there has been a fruitful discussion over the course of weeks to make sure Europe can loosen their dependence on gas. When it comes to the domestic picture at home, I will have to say, for the most part, the president has a lot of bipartisan support for how not only they've dealt with the sanctions, but also how they've been forthright and they were aggressive before the invasion to really articulate to the world President Putin's plans when it comes to Ukraine.
Anne-Marie, we're looking at, of course, the U.S. President Joe Biden arrive at NATO headquarters. He was greeted by the Secretary General. We'll see if he stops to talk to the reporters gathered there on the ground or whether he walks on. I think he's maybe tempted by the microphone. You're looking at a microphone being pretty close to President Biden. But I guess the main question is the U.S. can be much harder, of course, on imposing sanctions because they have less to lose in terms of energy and gas. What concretely can the U.S. do to help Europe in this difficult economic phase?
Well, for weeks, and we were the first ones to report about this at Bloomberg, the fact that U.S. officials alongside European officials were literally going around the world talking to massive natural gas players like Qatar to make sure they could try to get some supply if there was an issue where President Vladimir Putin was potentially going to make politics with gas, which you saw a little bit of that yesterday when he came out and he said, quote, unfriendly nations, these hostile nations that the Kremlin now deems should now start paying rubles for gas. You already see the Kremlin starting to play politics with fossil fuels. So what the United States had done was going to these LNG producers like Qatar and seeing if any sort of tankers to customers going to Japan could be diverted to the European Union.
Okay, Anne-Marie Jordan on the ground in Brussels as we follow this summit in the NATO headquarters. Maria Tadeo and Aggie Cantrell will be catching up with both of them in the next few minutes as well for an update. Stay with us. There is plenty more ahead. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We meet here at the NATO headquarters facing the most serious security crisis in a generation.
I think that the president is going to Europe in the hopes of getting European countries to band together and show a unified front.
I think we just have to stay strong and vigilant in a tight coalition and focused on enforcement.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, March the 24th. Our top stories today. Turning up the heat, President Biden is in Brussels, where he's meeting with allies to discuss ways to pressure Vladimir Putin to pull his troops out of Ukraine. The US and European Union are close to a deal to slash Europe's dependency on Russian energy. A deal could be announced as soon as Friday. And Vladimir Putin and Xi Jinping have exposed the great illusion of capitalism. Some observers say that unless the US and its allies mobilize to save it, the second great age of globalization is coming to a catastrophic close. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie here in London with Matt Miller and Kaylee Lines in New York. Anna Edwards is off. Kaylee, let's start with you on an important day for geopolitics once again for these markets.
Absolutely, Tom. The question is, will the market look through or even recognize any of the geopolitical developments today? Because by and large, it hasn't been moving on headlines related to the war in Ukraine to the same way it had earlier on in the conflict. Now, as for how the session shook out in Asia overnight, before we get the NATO summit, the EU summit, the G7 leaders meeting as well, it was mostly a down day. The MSCI Asia Pacific Index snapping a 3-day winning streak off by about 0.5%. One of the big drags was Hong Kong, specifically tech stocks in Hong Kong, and that was a move led by Tencent. That stock down about 6% overnight after it reported its slowest growth ever. The company literally declaring an end to an era of reckless growth for big tech companies. So that stock taking a hit as a result. In other asset classes, of course, we saw a bit of relief coming into the treasury market yesterday, yields coming in, and that was reflected as well in Australia overnight. The 2-year yield, the short end, really seeing most of the movement in about 6 basis points to right around that 150 level. And we continue, Matt, to see weakness for the Japanese yen. It is the 5th day down against the dollar in a row, weaker by about 0.4%, 121.60 167 where we sit. That is the weakest yen going all the way back to mid-December of 2015.
Yeah, I really think that yen story is huge, and maybe also a boon for the Japanese economy, actually, if they can sell their exports cheaper. Take a look at what we're looking at here. The S&P futures rising after a day of losses. Yesterday, we were off 1.2%, and the cash trade now futures are up about 2/3%. The U.S. 10-year yield rising as investors let go of some of that debt. So the 10-year yield at 2.3535, a pretty amazing level considering how far we've come and how fast. NYMEX crude up again today, but really little changed at 115.20 a barrel. Also still a relatively high level for NYMEX to be holding at. And Bitcoin as well. A risk-on indicator up almost 2% at 43,098. So we see a relatively high level there. It looks like a little bit of an everything rally today. Tom, what do you see in Europe?
Yeah, it's been a choppy session. We've made up some of the losses that were posted across the European session, but not all of them by any means yesterday. Losses yesterday, of course, gains of around 0.3% across the benchmark. Across the map, you're looking at gains of 0.4 over in Germany. The UK, the FTSE 100 up 0.3%. Here in Belgium, that, of course, is where President Biden is meeting with his European counterparts, NATO first, then the G7, then that European meeting, and, of course, watching for any response and any agreement, if there is one, on how to further wean Europe off that dependency on Russian oil and gas. The S&P, by the way, over in Switzerland, keeping negative at 75 basis points for their rate. That's not a big surprise, but of course strength for the Swissy, a safe haven within the crisis around geopolitics here. In terms of how things are breaking down across the benchmark gains, as I say, 0.2%. It's been choppy over the last few hours. The German Bund currently up 3 basis points, so echoing what we're seeing across the Treasury space stateside as well. Euro-dollar 109, Brent crude up 1%. Again, the eyes focused on what is happening within the commodities space and the implications for European equities. And of course, the importance today of seeing the Russian market reopen after being closed for a record period of time, almost a month. But with all the caveats that just 33 stocks are trading and foreigners crucial within this market are unable to sell, you're seeing gains of close to 8%. Also reporting that the wealth fund of Russia has been supporting that market. The ruble is at 96. You're seeing gains, losses, I should say, of around 0.2% after the gains we saw yesterday on the backs of remarks by Putin that he wants to see rubles paid in exchange for gas. Sberbank, the biggest lender in that country, gaining 8%, and Gazprom, the biggest energy company, up 15%. But again, the caveats of the trading and the ability or lack of ability to trade this market over in Moscow. Kaylee.
Yeah, you also can't short it. So certainly a large number of caveats as we see that market reopen, Tom. I do want to mention we did get a rate decision out of the Central Bank of Norway, the Norges Bank, raising its benchmark interest rate to 75 basis points, right in line with what was expected. But importantly, they also said the rate will most likely be raised further in June, and the policy rate forecast is higher than that in the December report. The Norges Bank now sees the key rate at 1.32% in the fourth quarter of this year, and the forecast indicates the rate around 2.5% at the end of 2023. Now, in terms of other central banks, we will get more Fed speak later on today. It will continue with Charles Evans, Raphael Bostic, among others, speaking as the drumbeat toward 50 basis points in May continues. We'll also get some U.S. data, including durable goods orders and initial jobless claims. And of course, as we've been discussing, a big day in geopolitics. President Biden is in Brussels for back-to-back summits, including the NATO summit, which is getting underway now, the G7 meeting, and the EU summit later today, Matt.
All right, let's get now more on President Biden's visit then to Brussels and the latest on the war in Ukraine, as well with our reporters in Brussels and on the ground in Poland and in Washington, D.C. We'll start with Anne-Marie Horton, our Washington correspondent. She joins us from Brussels, from the NATO headquarters there. Anne-Marie, what do we know about Biden's positioning as he goes into this, I guess, summitry is a word I've been hearing?
Yeah, it's a slew of diplomacy today, Matt, and it starts here at the NATO headquarters, which I'd just like to point out. The flags behind me, the American flag, is at half-mast today for the passing of the former Secretary of State, the first female Secretary of State, Madeleine Albright. But, Matt, when it comes to the president who just arrived in the last 15, 20 minutes or so, he was chatting with Jens Stoltenberg, the NATO Secretary General, as he's made his way into the headquarters. And the position of the United States was laid out pretty clear yesterday on his journey over on Air Force One with Jake Sullivan, his national security advisor, saying, one, there will be fresh sanctions on Russian oligarchs and lawmakers at the State Duma out of Russia today. And then second, there's going to be a lot of discussion in terms of European energy and its reliance on energy from Russia, notably Germany, Matt, which I know you know very intimately. More than 50% of their natural gas comes from Russia. And what the United States has been trying to do over the course of weeks and months is really just try to find these supplies and elsewhere. You can get LNG from America, Qatar, and other places. What they're trying to do is potentially loosen that hold that Putin has on Europe's economy when it comes to fossil fuels.
And Anne-Marie, given the reluctance of Germany, Hungary and others to go hard on this or go further, what is the prospects of a deal then between the US and the EU on this question of cutting exposure to Russian energy?
Well, you're not going to see sanctions on it yet. Germany's just not there. I mean, Olaf Scholz, the chancellor, was speaking at the Bundestag just yesterday saying hundreds of thousands of German jobs rely on that industry of Russian gas coming through. But at the same time, you saw the German economy minister, Robert Habeck, in Qatar over the weekend talking about the need to find new LNG supplies. The issue Germany has is they don't have any LNG terminals. They're quickly trying to build them. That will take months, if not years. So this is a very long process that Europe needs to have in terms of decoupling from Russia and how they heat their homes and put their lights on. When it comes to discussions we can get from a deal, it's whether or not and how the U.S. can help Europe just try to find supplies elsewhere, because it already, you see the door opening of President Vladimir Putin trying to play politics, as he's done sometimes in the past with natural gas, now saying that he will only accept rubles, especially from those countries that he deems, quote, unfriendly.
All right, thank you so much to our Washington correspondent, Anne-Marie Hordern, outside the NATO headquarters in Brussels. Meanwhile, inside NATO headquarters, we are seeing world leaders assembling for a family photo. Before that meeting begins, we see Mario Draghi and Boris Johnson of the UK, among others. So let's now head to the EU Council in Brussels. Our European correspondent, Maria Tadeo, is there. And Maria, Anne-Marie was just kind of running us through the issue of energy reliance on Russia. What is the latest thinking out of Europe, specifically out of Germany, when it comes to that issue?
Well, before we get to Germany, we need to look at the loophole that yesterday Vladimir Putin was trying to put on the table now, saying, I'm only going to book payments if you pay me in rubles. If not, we're not going to do these transactions. For the Europeans, in many ways, this is a threat, but also they believe a way of piling more pressure on the continent. And the officials that I've been speaking with, they tell me, A, they're not going to do it because it means renegotiating a contract under the terms that Vladimir Putin lays out on the table. They don't want to do that. There's no appetite for that. Then secondly, they know the game plan here. What he's trying to do, of course, has been shut off of hard currency. So he's trying to prop up the ruble. The Europeans say they have no plans to do that. And then we just heard from the Estonian prime minister say, we're not going to pay in anything that's not hard currency, but also we should be looking at the creation of an escrow account. So that means that Vladimir Putin is not going to be able to touch money that we pay him to continue war here.
What else can they do? I mean, we just heard Anne-Marie tell us something that we all know painfully well. Germany gets more than 50% of its gas from Russia. Now, if Russia says, we're not selling you the gas unless you pay in rubles, and Germany says, we're not paying in rubles, then I guess they're not getting the gas, right?
Well, but that would be up to Vladimir Putin, and it's the European Union that wants to force that decision from Vladimir Putin. That would make him a complete pariah for the European Union. Essentially what they say is these contracts, the way that we sign them, they're in euros or dollars. To change it unilateral because you want to change them is something that we're not going to do. If you want to put Gazprom on the line as your big energy mayor that's not capable of complying with a contract, then do it. But the decision will have to come from Russia. It's Russia that has to make that breaking point. It's not going to be the European Union. That is their thinking today. Now, when it comes to what do they do, I mean, it's very clear to all of the Europeans that you don't switch off from gas that comes from Russia from one day to another. Even if we get a deal with the Americans this week, it's not going to be about the next winter. This is about 2 years down the line. But this ruble payment move, they see it as incredibly political. They say, we're not going to comply.
Of course it is.
If it's you that doesn't want to play by the rules, then you do it. Then you do it. Cut the flows then.
He's already not playing by the rules, right? He invaded a sovereign nation. So, I mean, this is the issue. They don't have a choice.
He has one, and that's and that's clear, Matt. But for the Europeans to say, okay, it's fine, we're going to accept this and take it in rubles, politically is something that they don't want to do. So at this point, they say, okay, it's down to Russia to make the decision. You want to cut the flows, you want to put Gazprom down the line, go ahead and do it, and we'll have to deal with the repercussions of this.
Okay, Maria, today on the ground in Brussels, working through the European response, of course, to that dependency on Russian energy. Let's get the response then from Poland. Bloomberg's Aggie Cantrell is there, of course, monitoring the refugee crisis that continues on the border. And of course, we know the president is going to be visiting Poland tomorrow. Aggie, what is the Polish response to what is unfolding in Brussels? What is the message going to be from the leadership in Poland to President Joe Biden?
So Poland is one of the European countries that is deeply hawkish against Russia. They see Russia not only as a security threat to Ukraine, but also a security threat to themselves. When I speak to Polish people here, they are concerned, deeply concerned about some of these airstrikes that have hit relatively close to the Polish border. And so Poland is not only dealing with the humanitarian crisis of over 2 million of the refugees that have come over the borders have come into Poland, but also they see it as a need for NATO to step up its commitment to its eastern flank and make sure that countries like Poland are going to be well protected against any sort of threat that Russia may pose to them.
Well, and Aggie, as we speak, the family photo has wrapped up at NATO headquarters. We see President Biden huddling with Emmanuel Macron of France as well as Boris Johnson of the United Kingdom. Of course, we will also be hearing from President Vladimir Zelensky. We'll be addressing this NATO summit. And this is really just the latest in a virtual world tour that Zelensky has had underway, speaking to the leadership of France, of Italy, of course, the United States last week. Has his messaging changed? What does he need given the situation on the ground in Ukraine?
The thing that Zelensky has pushed for over and over again, and it's still not going to happen because NATO is unwilling to cause what they think would be an escalation, is to close the skies, essentially create a no-fly zone over Ukraine. They do not want, NATO does not want to engage with that prospect because they think that it could pose an escalation. They are still pushing for more weapons from NATO into Ukraine, and it does seem like, to an extent, the Ukrainians, it's worth remembering that this war is a month in now, and the Ukrainians seem to have been putting up a much greater resistance than what people originally expected. Figures from NATO yesterday estimated that between 7,000 and 15,000 Russian troops have been killed in this war in just 1 month. And the upper limit of that, the 15,000 figure, that's the same amount as was believed to be killed in the Afghan war that the Soviets had in the 80s that lasted 10 years. So that's the real significance, is that while they're calling for the skies to be closed in order to mitigate the humanitarian crisis, from NATO's perspective, it may be that the Ukrainians can push the Russians back to an extent without the need for that additional support.
Yeah, and of course there is a question as to whether or not those NATO estimates are actually making their way to the domestic population within Russia, or if that reporting is a little different on the home front. Thank you so much to Bloomberg's Aggie Control reporting from a humanitarian center in Poland. Now let's get back to the markets, because there are stocks on the move in pre-market trading here in the U.S. Among the groups moving to the upside is actually a lot of the semiconductor stocks. You have Qualcomm higher by about 1%, NVIDIA is higher by about 2%, and of course we had some interesting commentary out of NVIDIA's CEO yesterday talking about potentially looking at Intel as a manufacturer for its products. So they say that journey to it becoming a foundry may be a little bit hard. As for some stocks moving lower, we're seeing a little bit of froth coming out of some of those meme stocks that have had a renaissance in recent days. The latest one is Lego. This is an EV charging company. It just went public last week via a SPAC merger. It was up 114% just yesterday. It's giving some of that back, though, down about 7% in early hours this morning. And the original meme stocks, GameStop, AMC, have had big rallies in the last 2 days, but they once again are moving lower this morning, each down by about 2%, Tom.
Okay, Kayleigh, thank you. Coming up, exposing the illusion of capitalism. We're going to speak with Bloomberg editor-in-chief John Micklethwaite about how he thinks the West must save the second great age of globalization. And Andrew Bulls, PIMCO CIO for Global Fixed Income. We'll work through the fixed income market with Andrew. Plus, we're going to be speaking exclusively with the South African President, Cyril Ramaphosa. That is live in Johannesburg. Stay with us. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Tuesday, Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage X Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kayleigh Lyons in New York. Anna Edwards is off. Now, the conflict in Ukraine could mark a lasting change in the way the world economy works and the way we all live our lives. That is the argument made in today's Big Take, written by our editor-in-chief, John Micklethwaite, and Adrian Wooldridge from Bloomberg Opinion. John Micklethwaite joins us now in the London studio. John, it's a fascinating piece. You're a master, a craftsman when it comes to the history. What are the lessons that we can learn from the First World War? What are the lessons that leaders now, contemporary leaders, should be learning from the First World War and the ramifications of that conflict?
I think if you look at the First World, you could compare the First World War and the Second World War. At the end of the First World War, and certainly going in, you had the First World War came at the end of the first great age of globalization, where things were much freer than they are now. You could move people, capital, goods around the world. You didn't need a passport. None of the problems I had trying to get into Paris as a British citizen a week ago. All those things were there, and the whole thing came apart. And at the end of the war, or during the war, people never thought, people never presumed that this was going to happen. They thought that the world was going to continue to be a free trading place, but things grew up. At the end of the Second World War, there was a conscious effort led by people like John Maynard Keynes, who catalogued that first collapse. And they looked at the idea of creating a sort of bigger, more global world. Initially, one just focused on the West because you had the Cold War, but one that grew from it. And what we worry about is you look underneath what is happening this time round. There's all the blood, there's all the focus on Ukraine, and rightly so. But the fact is these things matter in the broader world. In this particular case, you've got geopolitics has been moving against globalization, with China, I think, now even keener to go a little bit by itself, even keener to decouple. And you've got CEOs. Every CEO around the world is looking at Ukraine, looking at Russia, and thinking, I can no longer have just-in-time manufacturing. I've got to think about just-in-case, which means bringing production back closer to home.
Well, and John, we've already seen a number of CEOs pull out of Russia beyond what they were required to do by sanctions, right? Making decisions that affect their own supply chains because they're concerned about political consequences. Are they doing that with Taiwan already as well, getting ahead of the possible next move from China?
I think if you talk to any big company privately that has got manufacturing in China and around the world, they are definitely making that decision. not precisely on the issue about whether China does invade Taiwan, but on the basic idea that the world is decoupling and that they have to get ahead of that. And in some cases, it should be said, it's not just fear, it's also greed. You look at pretty much every market in the world, there's talk of creating national champions. Business people, as Adam Smith pointed out, amongst many other people, there's no better thing to have a market that you can get protected in. So many people now are looking at what's happening in semiconductors. Kayleigh just mentioned that. You're looking at what's happening in energy, and they're thinking it would be much better, much safer for me to be there, protected by a government, and pushed forward by a government. And it's one of those things that you can never, once it's happened, once that shift in a mindset has happened, it's very, very difficult to push back. We begin our piece with a Londoner, a famous piece of John Maynard Keynes. It's a Londoner sitting in 1913. He's sitting in bed. He's ordering everything from around the world. He's using the new telephone. He's ordering goods from this place, from that place. He's thinking about all the different areas he's going to go. And he fails to notice at the bottom of his newspaper a small headline saying, Archduke to visit Sarajevo. And I think, being honest, I think if we all look back to how it felt a couple of months ago, most people thought we're coming out of COVID. People were looking, most business people were looking at the broader world. What was happening with Vladimir Putin in Ukraine seemed like a distraction at the time. Now it's come right to the fore. And once it comes to the fore, it's very difficult to deal with.
Yeah, and now it is at the fore, making the coming weeks critical. And you say in the piece that the cure to globalization's woes is not to abandon economic liberalism, but to redesign it. What should that redesign look like, and who needs to lead it?
Well, there are two things. I think, firstly, the biggest thing is to hang on to it. You look at Joe Biden, the thing which the biggest geostrategic mistake he's made is, and I've seen it myself, I watched Gina Raimondo go around Asia. You have there a very clever commerce chief. She was wandering around Asia talking about frameworks and other things. Every one of America's allies in Asia wants a trade deal. Right now, there's a possibility, I think, of doing a new trade deal with Europe. What Biden needs to do, I think, is to rethink national security. And rather than starting from the point that trade deals are the last thing he wants to do, he has to think that is the way in which you cement alliances. And he has to make the case to the American people that actually doing deals with the other great democracies of the world, and he talks a lot about an alliance of democracy, but he has no substance for that without things like trade behind it. And that this is actually an issue of national security. It's not just to do with union jobs, it's bigger than that. And that really is the big part of it. But yes, you can redesign globalization. You can redesign globalization so that companies do not avoid tax, so that you bring in things like environment. You can build back better, to use another glib title which some people use.
Bloomberg Editor-in-Chief John Micklethwait, thank you very much indeed on the need to rebuild and remake globalization, not to lose it completely on the back of this conflict. Check out the big take, of course, on your Bloomberg, as well on Bloomberg.com. Well worth your time. Coming up, Andrew Bulls of PIMCO, we're going to talk fixed income. This is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. President Biden is in Brussels, where he's meeting with allies to discuss ways to pressure Vladimir Putin to pull his troops out of Ukraine. The president has back-to-back summits with NATO, the Group of Seven, and the EU. He's expected to unveil tough new sanctions on Russia. The US and European Union are close to a deal to slash Europe's dependency on Russian energy. An agreement may be announced as soon as Friday. President Biden's National Security Advisor, Jake Sullivan, says there will be a surge of US supplies of liquefied natural gas to Europe. And Chinese President Xi Jinping has spoken with at least 8 world leaders in the month since Russia invaded Ukraine. There's one big omission, though, from his list: Volodymyr Zelensky. Xi may be reluctant to speak with the Ukrainian president since declaring he had a no-limits partnership with Russia's Vladimir Putin several weeks before the invasion. I'm Tom McKenzie in London with Matt Miller and Kayleigh Lyons in New York. Anna Edwards is off. And Matt, the US markets, as we weigh up the geopolitics that are unfolding within Brussels, and maybe a deal that comes to formation at the end of this week on the question of Europe and its reliance on energy.
Yeah, well, certainly it looks like a risk-on start, at least so far. We've got S&P futures that are still gaining right now, Tom, and you've got investors willing to let go of the perceived safety of government debt. So the 10-year yield is up to 35.90, a relatively high level there, and it's come very far, very fast. S&P futures are rising. I guess as investors get out of bonds, they're willing to put their money into equities. Not really into crude. We've seen NYMEX bounce back and forth between gains and losses. Not a lot going on in the oil patch, although it is at a relatively high level, 115.03 a barrel for Texas Intermediate. And Bitcoin is up almost 2% right now, 43,121. And that's just a decent gauge of the market mood, Kayleigh. So we know that it's been very correlated, and that means today's pretty risk on. What do you see in terms of pre-market movers?
Well, in correlation with a move higher in Bitcoin, you are seeing a move higher for crypto-related stocks like Coinbase. It's one of the outperformers in pre-market trading, up about 2%. Even though oil is flat on the day, you're also seeing a little bit of outperformance for some of the energy players. Hess is higher, as is Marathon Oil. It's up about 0.7%. And as I mentioned, semiconductor stocks also getting a bid in the early session, one of them being NVIDIA, which is higher by about 1.8%. The CEO, of course, yesterday talking about potentially using Intel as a manufacturer for its products. One stock moving to the downside, really a group of stocks moving to the downside, are those meme stocks that have enjoyed a recent renaissance. But after moving up 31% in the last 2 days, one of the original meme stocks, AMC, is moving slightly lower in early hours, just giving a little bit of that back, Tom, down about 1.6% before the bell.
European markets have paired some of the earlier gains. We're currently range-bound across the benchmark European Stock 600, Kaylee. The German Bund is up in terms of the yield by 4 basis points at positive 50. And in terms of the euro, under pressure, 0.2% lower in today's session. Brent is up, well, it was up about 0.1%. It's now range-bound. You're currently looking at 121 for Brent. It's been a bit choppy in the oil markets. We'll have a look as well at what's happening in Russia, because Moscow's reopened its markets for the first time in about a month. A record close in terms of the time frame there for the Russian markets. The benchmark is gaining 5%, but with the caveats that just 33 companies are trading, foreigners cannot sell, and short selling is banned. The ruble currently is weaker by about a little over 1.2% currently for the Russian currency. Sberbank, the biggest lender in the country, gaining 3%, and Gazprom, the biggest energy company, up 14%. Matt.
All right. Now, it has been an incredible quarter for volatility, no matter where you look, but certainly in fixed income. We've seen the worst quarter for the Bloomberg U.S. Treasury Index since 1973, so in my lifetime. And in fact, global bonds, wherever you look, sovereigns, corporates, etc., junk, are going down, as is evidenced by this chart. If you're listening to us on Bloomberg Radio, I'll just tell you we've got a picture of global bonds across all different sectors, and they have had a rough 3 months. Joining us now is Andrew Balls, the CIO of Global Fixed Income at PIMCO. And Andrew, I want to first just get your take on what this means. The horrible quarter that we've had for fixed income, does that mean we see a bounce back in the rest of the year?
Well, you start to see more interesting levels, that's for sure. So we've had a couple of years where you had the big gains during the COVID shock, normalization since then, and then now into the Russia-Ukraine war shock. But you're seeing 10-year treasuries looking, reasonable levels now. The German Bund has moved higher, after these years of negative yielding bonds. You're seeing 50 basis points for the 10-year. So yes, there's volatility. You've got to manage through the volatility. We think it's a time for being very careful in terms of your investment approach. However, you're now seeing these levels where there is protection against downside risks, and we've just published our most recent outlook. It's a very difficult environment. It's very hard trying to gauge the impacts of the Russia-Ukraine situation, supply chains, energy prices for financial markets. Central banks tightening, but we're starting to think about recession risks, the recession of 2023 or maybe even later this year. So it's a time when I think bonds will play a important part in your overall asset allocation, and the levels are now more interesting.
So Andrew, you and the team are starting to think about a recession as soon as the end of this year. Where does that leave you? Where do you want to be sitting on the curve then? I
think, in Europe, you're closest to this Russia situation. In the baseline, the energy keeps, the gas keeps flowing from Russia to Germany, Italy, and others. But in an environment where that is interrupted, then you have much more downside risk. The good news is you're starting off post-pandemic above trend growth, so there's some cushion there, but there's risks. And then, looking at the shape of the yield curve in the US, the central bank in the US on a more aggressive rate tightening path, inevitably it raises questions about the growth impact. Yeah. And we saw in the last cycle the vulnerability of financial markets, equity prices, credit spreads in a period of tightening central bank policy. So that's another concern.
Andrew, you mentioned the shape of the yield curve. If we actually see an inversion when it comes to 2s, 10s, do you think that will alter the Federal Reserve's behavior?
I don't think so. I mean, Chairman Powell laid out, how they look at this, the shorter part of the curve where their focus is. But over time, inversion 2s, 10 has been an important thing to watch. But you're in this difficult situation, one we haven't been in for a long time, where you have an energy price shock. We call it anti-Goldilocks, negative for growth, but pushing inflation higher. and the central banks are going to have to focus on the inflation side. And it's the first time in more than 20 years that during a period of growth shock, you're not going to have central banks providing the cushion. They're going to have to focus on the inflationary impact, just because we started off already with high inflation coming out of the COVID period and the supply shocks. So, lay a new shock on this already difficult period of supply chain disruption, negative growth impacts, but positive inflation impacts. It's a difficult environment to be trying to navigate.
Okay, Andrew Bulls, CIO of Global Fixed Income at PIMCO, on this anti-Goldilocks economy. Thank you for those insights. And Kayleigh, President Biden, of course, is on the ground for that NATO summit. Before we get to that, we're going to be speaking exclusively with the South African President, Cyril Ramaphosa. That is live in Johannesburg. Stay with us for that conversation. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Kayleigh Lines with Matt Miller in New York and Tom McKenzie in London. Anna Edwards is off today. Well, today, President Biden is meeting with European allies at an emergency NATO summit in Brussels. They're expected to increase economic pressure on Moscow. Around the world, however, the response to the war has been mixed. South Africa is among the countries which have so far resisted calls to condemn Russia's invasion of Ukraine. Let's now go to Johannesburg, where our Manus Cranny is standing by with a very special guest. Manus, over to you.
Katie, thank you very much. Yes, I'm here in Johannesburg. It's an investment day for the president, Cyril Ramaphosa. He joins us on Bloomberg. Mr. President, welcome. Good to see you.
Thank you.
So as you and I sit down, Mr. Biden steps off a plane. He arrives at NATO. Oil is at $120. We had a commodity super cycle. It started before the war, but it's a huge alpha for you. How optimistic are you that this super cycle in commodities really holds and continues?
Yes, we're in a super cycle, commodity boom, and when it started, I thought it was going to taper down. Now, with what's happening in the world, I think we're seeing a resurgence. And for us, as a commodity-based economy, this is really great news because our revenues just go up. We're then able to put money to a number of issues, investment, capital investment, which has been going down over years. We're able to put money into social projects to address the question of unemployment and poverty.
But the world is grappling, your people are grappling with a cost of living crisis as well. I want to understand, and the global investment community want to know, the political capital that you have, will you deploy that to protect credit ratings or to deliver subsidies? What is the priority for the political capital you have?
Well, we've always sought to be balanced, even as we had a real inflow of revenue recently. Rather than put it all into social concerns, we decided to balance so that we can balance our books, we can reduce our deficit, but at the same time address the issue of social needs that our people have. So we create that balance and the country moves on.
Let's say the bond markets go with you. They're with you at the moment. You've got a fair wind. We talk about political capital.
Yeah.
You have a neutral stance on the Ukraine-Russia war, as I understand it.
Yeah.
Is there pressure for you to hold a neutral stance? Is it a political pressure of history from the ANC? Do the people of South Africa support your neutrality?
Well, people of South Africa in the main, yes, do support the stance that we've taken. And the stance that we've taken is largely born out of our own DNA, a DNA that says resolve problems through negotiation, mediation, and try to bring people together. And that is how our democracy was won. And we now carry that DNA forward, even into global issues and conflicts. We believe they should be resolved through interventions of negotiation and mediation.
And I understand that that's your position. You said on Twitter last week, I've been approached to play a role in mediation within your BRICS standing. Did Putin ask you to do that? Who has requested your mediation skills?
When I spoke to President Putin, I told him that we were being approached largely by non-state institutions who believe that the experience that South Africa has can be brought to bear on this. So in my discussions also with President Xi Jinping, I informed him that we are being approached, but those approaches are slow in coming forward. And we are saying if approached much more positively, we are willing to play whatever role.
Does it take Biden to lift the phone to you? Has he, to ask you to mediate, to ask you to garner support?
No, President Biden has not called. So whoever would be willing to place a call to us, we would be willing to weigh all that up and see what role we can play.
The impact of neutrality can cost. You know, this position of neutrality can cost. The risk is this, that not tomorrow, not next week, that investment could be held back from you by the global investment community because of your neutrality. Are you prepared to hold that neutrality and take that risk?
Well, neutrality can cost, and fortunately we are not alone in all this. There are many others who've chosen the path that we have chosen. And the benefit of being where we are is that we can talk to both sides. It gives us that possibility, that optionality then comes to the fore. And the investment conference that we're having now, some in our country were saying investors will shy away from us. And in fact, we're seeing exactly the opposite.
So it hasn't, this neutrality stance hasn't cost you so far. Can I push you a little bit? President Biden has gone so far as to call President Putin a war criminal. You are one of the few countries not to condemn Russia's invasion at the UN. Why?
Well, because the stance that we have taken is that we need to look at everything in totality, but also base it on the need for people to sit down and talk.
To mediate.
To mediate. Because I've often found that when you can play a role in mediation and getting people to negotiate, when you actually do attack them, it diminishes the positive role that you can play in finding a solution.
I know that the rebirth of your nation was in part built by sanctions leveled against old institutions. Do you believe sanctions are the right road to get Putin to de-escalate? You've lived through sanctions.
We've lived through sanctions, and we advocated for sanctions because we were dealing with a system that was a crime against humanity
But
at
not,
large.
Mr. President.
But that, no, hold on. And everything else had failed. Many attempts have been made to bring the parties together, and it had failed. And that was then opted for as the last resort. Now, in this case, we are saying what we should be doing is to make all efforts to try and mediate this conflict. When I spoke to President Putin, he told me that talks are going ahead, and he thinks that they could possibly lead to a good conclusion.
Do you think he's in the mood to mediate? Is there a shift in the dialogue? Lots of people say to me, he's not in the mood to mediate.
When I spoke to him, he demonstrated to me that yes, he is in the mood to have talks being successful. And I think, and any belligerent should be able to be willing to sit down, because war is costly on both sides. So he is in negotiations now, and he wants to see the negotiations succeeding.
Sir Ramaphosa, thank you for inviting us today. We hope to see you soon, and for your time and your hospitality here in Johannesburg. The President of South Africa, Cyril Ramaphosa, on Bloomberg.
All right, Manus, thanks very much. Bloomberg's Manus Kearney there in Joburg with Cyril Ramaphosa, the President of South Africa, who says the people of South Africa, in the main, support his neutral status. Now, for more on the war in Ukraine, we're joined by Dr. Lindsay Newman, Director of Global Political Research at S&P Global Market Intelligence. Doctor, I wonder if you could first weigh in on what you heard from Cyril Ramaphosa there. He says people support his neutral status, and it's in their DNA because they believe that mediation and negotiation is the way to solve conflict. Shouldn't they then really be opposed to the Russian invasion of Ukraine?
Well, obviously, the president's taking a position as the leader of his country, and he's in the best position to comment on that and what he feels that his electorate, his domestic population suggests. And I think, really the headline for today, for those who are, just waking up now, is that this is a critical phase we're entering of the conflict. We're exactly 1 month into the conflict, into Russia's invasion of Ukraine today. We have, as you've already mentioned, Biden is on the ground in Brussels. There is an emergency meeting of the NATO, an emergency NATO summit. There is a EU Council session. And of course, Biden will be meeting with his G7 allies, all to deliver a message of we need to remain cohesive. We need to remain united, as has been the case thus far over this last month. And Jens Stoltenberg, head of NATO, has also conveyed that message. He expects further cohesion and unity around perhaps cyber efforts to support Ukraine on cyber, against cyber attacks, plausible cyber attacks, and plausible CBRN usage. But as we said earlier in the hour, there are potential misalignments between the U.S. and its European allies going forward.
I wonder what you think of the threat that Russia has made to the European Union, in a sense, right? Putin has said they want payments for their gas in rubles. We heard from our reporter on the ground, Maria Tadeo, earlier that the EU is opposed to that, saying that they won't pay. How does this standoff move forward?
Sure. Well, as I was already alluding to, there are misalignments here. There is this announcement of a potential energy deal. Ironically, not the nuclear deal with Iran to unlock Iran's energy, but in fact, we might actually see a U.S.-European energy deal in quite rapid succession in the next coming days to sort of alleviate some of that pressure for Europe. But, a key point here is that even if the conflict were to end today, we are not unwinding back to pre-February 24th. For Russia, our economist thinks the year ahead looks like a forecast contraction of 11% of their economy because of these sanctions and the corporate self-sanctioning. For Ukraine, it's immense, the potential economic contraction because of property damage and the massive outflow of working population and refugees, the humanitarian crisis, which has seen upwards of 3.6 million already leave Ukraine. So our economist thinks that's a 40% contraction, hitting the global economy through supply chain disruption and commodity price surging. Our pricing and purchasing team has called this the everything rally, really, that we're seeing, and inflation, historic inflation levels since 1995, really.
Lindsay, we have some lines crossing as leaders continue to meet in Brussels at NATO summit. The G7 to warn, this is a red head across the Bloomberg terminal, the G7 to warn Putin against using chemical or nuclear weapons. Of course, this has been a warning from the US as well. That's been reiterated in the last few days, at least underscored in the last few days. And the G7 also set to warn against the use of these weapons. That takes me on to my question, Lindsay, which is about the various different scenarios, because the markets are trying to work out and game out how this could play out, all the different scenarios. And I know you and the team have been doing an analysis on this. So just map out for us the various scenarios, one of them presumably being the use of these kind of weapons and whether that's a red line for NATO intervention.
Yeah, so you're absolutely correct that we've been doing a lot of scenario analysis on our team. First and foremost, looking at the 6-month outlook, where we think escalation, the escalatory pathway is most likely, the most likely scenario for the 6-month outlook, although perhaps degrading over time as the likelihood of ceasefire increases. As you say, that escalatory pathway could potentially involve the consideration of deployment of CBRN. We've seen Russia do that in Syria. It's a very different theater, and I think that's the concern that Biden is bringing in his messaging today, as you said, Stoltenberg and highlighted yesterday. And of course, you're absolutely correct. That is a key question that the market is watching, alongside a host of other geopolitical questions, like are we seeing the emergence of a new U.S. foreign policy, a new approach? Will these partnerships between the U.S. and Europe last?
On the question of China and its role in trying to address this crisis, and of course we know that Beijing has been doing U-turns, essentially ebbing and flowing on its position, trying to walk these two contradictory lines on the question of Ukraine and the invasion. Is there a sense that Beijing can play a constructive role at this point? How do you see China's role going forward?
Yeah, absolutely. A key question here is China's role in the world. And of course, clients are asking us on a daily basis, what role China will play with the conflict. What does this mean for Taiwan? We have to keep in mind, and we're making this point very clearly through to our clients, that China is facing a very important domestic year ahead. President Xi Jinping is going for a 3rd term at the National Party Congress this fall. So that is the key focus for China at the moment. Whether it can play a mediating role, it has suggested that is something that they'd be willing to do. But what China really needs to maintain is a stable outlook, a stable economic outlook, and the risk of something like the U.S. imposing, or U.S. and Europe imposing secondary sanctions is really just not would not be what China is looking to do in this very important political year for it.
Okay, Dr. Lindsay Newman, Director of Global Political Research at S&P Global Market Intelligence, on the possible scenarios emanating from this continuing conflict as leaders, of course, meet in Brussels, NATO, G7 and the European Council for President Biden today. Then he moves to Poland tomorrow. The markets currently across Europe, range-bound, future stateside, pointing to gains. More Bloomberg surveillance is ahead. We're going to hear from the Moderna CEO and Leslie Vinjamuri of Chatham House, again on the geopolitics of the moment. Plenty more ahead. Stay with us. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
The Fed is very concerned that they're behind the curve, that they've waited too long.
You're seeing the Fed put the classic trial balloons out there and say, hey, what if we did go 50?
I think there is a significant risk of a hard landing. And since we're being blunt, let's say the word recession.
If Powell is as hawkish as he's trying to make us believe he will be, a recession isn't far-fetched.
We're going to get a recession at some point in the next few years. The question is, when?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio with Tom Keene and Katie Lyons. I'm Jonathan Ferro. Futures positive 0.5%. TK, welcome back. Happening right now, a NATO summit in Brussels.
The difference from Paris to Ukraine, John, you really did not feel the war, but the tension was there. Nevertheless, you saw it across all of Paris, and this morning we see it in NATO. John, I hesitate to use the word pageantry as we see Macron and Biden, but to me, these are important meetings.
Well, Tom, we go from NATO to a G7 meeting, an EU summit as well. What do you think is achievable today?
I'm not sure what's achievable today, to be honest. I think we're going to see something on LNG. That's more of the Bloomberg world. Maybe we're going to see something on further armament of Ukraine. But what's achievable here is to get the allies together. Mr. Biden said that from day one of his administration.
The allies coming together today. Katie Lyons, a little bit earlier this morning, a draft statement for the G7 seen by Bloomberg reads as follows: to warn Putin against using chemical or nuclear weapons.
Well, the operative words there, John, statement and warning. We're talking about words here. The question is whether or not the West can get themselves together on any further action. Of course, the president has promised further sanctions that will be announced during this trip to Europe. But without Germany being able to get on board with an oil and gas embargo, with questions around that, especially as Putin demands payment in rubles for Russian natural gas, a lot of questions circling around energy specifically, and it'll be interesting to see how much detail we get on that today.
Well, Kelly, I think you've absolutely nailed it. Tom, does a strongly worded statement this week, does that get it done, a strongly worded statement?
No,
or do we need to see some action?
This is action on a dynamic scene. I mean, to go to the Bloomberg world, John, the major issue for me is commodity prices are vaulting forward, maybe not out to highs. Maybe it's not wheat and corn. Maybe it's metals. Maybe it's oil. But they're working within a movable feast of market activity, and the market is speaking about what needs to be done. They've got to move quickly.
Should we talk about the bond market as well, Tom? You've been gone a while, 20 basis points ago on a 2-year.
Well,
when we closed out February, we were south of 150. Right now, Tom, 215 on a 2-year yield, up another 5 basis points.
It is, John. I watched it off the mobile Bloomberg. You know, I'm glued to it the entire time. I was at the top of the Tour Eiffel, using my mobile Bloomberg, and saw that bond move. I thought of you, John.
Did you think of Steve Major?
I thought of Steve Major. It's interesting to see. This is serious. Let's talk about this, John. Here's a guy who set up for low rates. He still says low rates happen, and he says stuff happens, and he has to translate for an idiot like me that it's soccer.
2%, the year-end call, Tom, on a US 10-year. Now it was 150. N23, he goes to 150 from 1%. So that 150 slips out to 12 months out. We've seen a big move, Tom. People have got to make a move off the back of that.
I didn't bring you back any PSG swag. It also
nothing at all.
No, you know.
No gifts.
I knew you didn't want it.
Thanks, I appreciate that. The St. Louis Fed sent me some shredded money. From the Money Museum, some shredded money.
My kids sent me some shredded money.
Thank you, President Bullard, for that one. I'm not sure what he was trying to say to me via Matt McKee. Futures up 0.5% on the S&P. The Nasdaq up by 0.6%. A really important day coming up. From the NATO summit, the president moving to a G7 meeting. Then later on today, an EU leaders summit. We'll get our teeth into that in a moment. Up 7 basis points on 10s now to 236.63. Crude pulling back 0.4%. Katie still with a 114 handle at 114.45.
Yeah, a lot of volatility in the commodity complex, a lot of volatility really across asset classes, John, as markets continue to weigh each and every headline when it comes to the geopolitics. And of course, we will be expecting to get a lot of headlines today. As we've been discussing, it is something of a summit extravaganza happening in Brussels. The NATO summit is ongoing right now. Then at 9:15 Eastern time is when that G7 meeting will begin. Then later on, 12 p.m. is when the European Council summit will take shape. Again, as we've discussed, what tangible is going to come out of this other than words and statements, looking for action potentially from the Western Alliance. We also will be watching out for economic data today, 8:30 a.m. Eastern time, jobless claims. Durable goods will cross the wire on jobless claims. Economists looking for 211,000. So continuing this deceleration from the pandemic highs. My question is, how much does every incremental data point actually matter to a Federal Reserve that seems pretty much dead set on hiking in May, potentially by 50 basis points? That is where the chorus of Fed speakers over the last several days have continued to point to. And that chorus is not over. There is a lot more Fed speak that is coming up today. I actually had to write it all down. They're all at different times. 8:30 Eastern time, Minneapolis Fed President Neil Kashkari will be speaking. 9:10, Fed Governor Christopher Waller. Then at 9:10, Chicago Fed President Charles Evans will be speaking. And then at 11 a.m. Eastern time, Atlanta Fed President Raphael Bostic. Of all of those speakers, Waller may be interesting given some of his hawkish commentary at the end of the week last week. And then Raphael Bostic, when he spoke at NABE earlier this week, actually seemed the most dovish of them all, more wavery on the idea of a 50 basis point hike. But again, we already kind of know 50 basis points is firmly in the conversation. Will we get more detail on the balance sheet today, though, John?
Kelly, have we heard enough from these guys yet? In a few short days, about 50 of them.
It has been a lot of speak, John. But the chorus, it all seems that they're saying pretty much the same thing. So the question is, what can they say today that's going to be a little different?
Kelly, thank you. Even President Daley, Tom. If we need to do 50, that's what we'll do. President Mester, I think we're going to need to do some 50 basis point moves. It looks like they will.
Yeah, I saw Keith Horowitz over at Citigroup do a reframe on the regional banks today, John, and he's modeling in 10 rate hikes, 8 this year and 2 next year. And I'm sort of with Steve Major. We got to wait for the data. And I think, you know, I just think we're way out front.
Tom, they've waited for the data. It's gone. The story's gone. It's behind them. They need to act now. Is it really about the data anymore for the May move?
No, I think we can act here, up another tick, up 2 ticks, 50 basis points, up 75, maybe a stick, John. But then what? And we're assuming there's a then what right now.
The second half of this year could get very interesting, which is what
my
I think
my
you're
English
implying.
is rusty. I'm okay.
Take your time. How's your French?
I'm off for say
yeah, that sounds great. You keep practicing. Team coverage starts right now in Brussels. Bloomberg's Anne-Marie Hordern and Maria Tadeo. AMH, first to you, a busy day for the President of the United States. What is achievable today?
It's a great question. Yeah, it's a trio of summits. He first starts here at the NATO headquarters, and then he has a meeting with the G7, and then he goes on to the European Union, discussing with a slew of American allies about what next they can do when it comes to penalties and sanctions against Russia. We should note we just had a number of penalties announced by the United Kingdom. We're waiting for the United States, which are supposed to be going after a number of oligarchs and lawmakers. And then, of course, the G7. Bloomberg has seen a draft document of what the G7 is expecting to announce, and they're there's going to be some sharp words and a warning to President Putin on the use of chemical or biological weapons, what severe consequences that may mean. Right now, it is just words. We do not know yet what that next level could be in terms of sanctions, because they've really gone after the gambit of the Russian economy, and what is left, of course, is energy, but that is going to be incredibly difficult for Europe.
Maria Tadeo, what is the immediate war action in Ukraine? There's all this diplomacy, suits and ties, and fancy Chanel dresses going on. Great. What's the war report this morning?
Well, Tom, the fight continues. That is essentially the war report as we've seen for 28 days. And today we heard from the Ukrainian President Zelensky say we are going to continue the war. For as long as there isn't a ceasefire, the war is going to continue. And we take it that Russia is not serious about this negotiation. And Tom, this is very important. You know, I hear a lot of commentary about Ukraine should just take any ceasefire, should just accept any deal and put an end to a horrible war. But if you really look at the Ukrainian psyche, this is a country that really believes they can win this war and that really has been united by this aggression from Vladimir Putin. So if you ask me, are we going to see an end to this in the next few days? Well, what I hear from a lot of our Ukrainian sources who speak to us still from Kiev is that no, the fight will continue. They're not scared about this, but they will ask again for weapons and for further facilitation. And this is why this meeting between NATO is so important. By the way, Zelensky will jump on the call, and then he will also jump on the call with European leaders. But the other big thing, Tom, it's not the meeting in Brussels, but it's the meeting tomorrow in Poland between the U.S. president and the Polish president Duda. That will be key going forward. This is a country that plays an incredible role in Europe. It really is Poland.
Yeah, and we will look for the president's travels tomorrow, Maria. In the meantime, today, you mentioned that Zelensky will be hopping on the phone in this NATO summit. We already basically know that Ukraine's bid to join NATO is not going to happen. It's a non-starter. What about the bid to join the European Union? Can we expect any development on that front in these meetings today?
Look, and there has been a lot of debate about NATO and Ukraine, and many will tell you this whole crisis around NATO is completely manufactured by the Kremlin. The reality is NATO was never going to join NATO. Ukraine was never going to join the alliance precisely because of the tensions with Russia. What is key now is that Ukraine has accepted that. There has been a major reality check from this country, but what they say now is we do not want a bilateral deal with Russia. We do not trust the Russians under Vladimir Putin, so we want an international security deal, and we want to join an international union. And of course, that means the European Union. So really, this will be the hot potato for European leaders when they talk about Ukraine. Do you want to accept a country that's at war to join Europe? Are you giving false hopes? And then, of course, when it looks to the final peace deal, if we get that, and we hope we get one between Ukraine and Russia, the Ukrainians will double down on this idea that, okay, fine, we don't join NATO, but we're not going to be by ourselves and we're not going to be on our own. So therefore, it really is a European Union that we care about.
Maria, wonderful work as always. We'll touch base with you through the morning on TV and radio with Maria Tadeo and Bloomberg's Anne-Marie Hordern. The German finance minister is speaking right now. Tom, cutting the tax on fuel to the EU minimum for 3 months. I believe the EU minimum is about 36 euro cents a litre, so they're coming down about 30 cents a litre. They'll do this, Tom, for 3 months. You wonder how many others have to follow this act and how much support we'll see for consumers across the continent who need to pay a lot more for energy over the last few months and potentially, Tom, for the rest of this year.
Well, yeah, the inflation issue is there, but far more, John, is can the allies get together? And I would suggest on LNG, liquefied natural gas, that should be a key focal point. That's certainly what the president is selling.
Watch this space. Tom Keane, welcome back, sir. Missed you, TK. Oh. Bramo's gone. What's going on there? You come back, Bramo leaves.
Cross paths. All of Bloomberg's in Paris, John. You should join us.
I'll take a miss on that, Tom. How was Paris?
It was great.
Good.
Great. Love it, love it, love it. John, I think team surveillance, the election.
Yeah, I bet. I bet you've been thinking about that one.
I have been.
Futures, up 0.5%. Did you find a bar?
No, yeah, the bar found me.
No. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden and other members of the Group of Seven will issue a tough new warning to Vladimir Putin today in Brussels. According to a draft statement, they'll tell Moscow not to use nuclear or chemical weapons in their war with Ukraine. The G7 also plans to say it will fully implement the sanctions that countries have already imposed and are ready to impose more. The UK is out with its own set of 65 new sanctions on Russia, according to Foreign Secretary Liz Truss. They target strategic industries, banks, and business elites. Also on the list, the world's largest diamond producer. Truss said those sanctioned are, quote, complicit in the murder of innocent civilians, and it is right that they pay the price. Meanwhile, the US and European Union are close to a deal to slash Europe's dependency on Russian energy. An agreement may be announced as soon as Friday. President Biden's national security advisor, Jake Sullivan, says there will be a surge of US supplies of liquefied natural gas to Europe. And Kim Jong-un has finally abandoned a testing freeze on intercontinental ballistic missiles. North Korea launched its first ICBM in more than 4 years. It went higher and farther than its last test in 2017. South Korea says the test violated UN's resolutions and Kim's promise to hold off on such launches. Fidelity is launching a business that mimics hedge fund strategies for regular investors. The money manager will offer so-called liquid alternatives. Those are registered mutual funds that took off following the financial crisis. They fell from favor when the Fed's easy money policy boosted stocks and other plain vanilla investments. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Bloomberg Technology is live from the Shop Talk conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage X Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
Russia is trying to defeat the freedom of all people in Europe, of all the people in the world. It tries to show that only crude and cruel force matters. It tries to show that people do not matter, as well as everything else that make us people.
President Zelensky of Ukraine from New York City this morning. Good morning. I'll whip through the price action and bring you some more headlines from Ukraine's leader in just a moment. Futures up 0.4% on the S&P. On the Nasdaq 100 up 0.5%. Yields higher now by almost 9 basis points. That's quite a move. We'll stay on top of that for you. Approaching 240 on 10s, 237.91. This just in from President Zelensky, Tom. Russia attacked chemical factories for a second time. He's been addressing the Swedish parliament. He goes on to say the following, Tom, that all of Russia's neighbors live in danger and the Russian government only understands the language of sanctions. He's going to address NATO, Tom, later this morning.
And of course, the echoes there from Syria, where there's some real documented chemical use. John, I would say the chemical part of it is there, and of course is immediate for all of NATO, and for those that, you hate to say it, but follow the wind and the echoes of World War I. John, as I mentioned to Maria today, the backdrop here of diplomacy as war continues. This now with the Times of London and also the Associated Press, and we need to be careful, John, this is all from the Ukraine Navy, but within the war, 52 miles southwest of Mariupol in Berdansk, a ship has been, and there's different words used here, destroyed, damaged, sunk. I don't know what it is, but the answer is a major troop ship of Russia has been attacked by the Ukraine Navy.
We'll wait for some clarification on all of that, Tom. For me, outside of the realm of speculation, we've got to try and work out where this administration is on next moves. Next moves if things do escalate from here, and that's got to be part of the conversation between the administration and its allies through today and tomorrow, for that matter, with Poland too.
No, the next moves are there, and we'll follow that over the next couple of days and even the couple of hours here on NATO. Right now, let us segue to economics, finance, and investment, and the next moves. Andrew Slemon joins us, Senior Portfolio Manager at Morgan Stanley. Andrew Slemon, John Farrow, you know him, the famed investment strategist, once told me the year always starts March 31. It is upon us right now with the great reset of December 31 reviews that should be thrown out the window. What is your reset March 31 as you move on?
Well, I think March 31 will be ugly, but it certainly won't be as ugly as it was earlier this month. I think the market's put in a very noble rally off the low, and I wouldn't be surprised if we bang around here or even higher before the end of March. But I don't think I don't think we've seen the low for the year. So I think there's more pain to come, in second quarter into the summer before we put in the ultimate low.
There's a kink where yield helps the banks, helps the markets, and then it doesn't. Yield gets too high. Where is that on equivalent 10-year U.S. yield? What's the level where it really begins to hurt?
Boy, you have nailed it.
Did I do okay?
I think that is the key question. Because, look, these yield curves, choose your yield. It's almost like choose your yield curve that fits your narrative. Oh, if you want to, talk about a recession, then you look at the 2-year to 10-year. If you think, things aren't that bad and the economy's strengthened, then you look at the 3 months to the 10-year, that's steepening, tops out. So I think the point is that financials run out of steam before the yield curve tops out. And so that's going to be my litmus test of, are we really headed towards a real slowdown, or is the economy going to be able to withstand Fed tightening? And I think the relative performance of financials is going to tell you. If they keep performing okay in a rising interest rate environment, that tells me that, you know, we will survive this, you know, Fed tightening campaign. I don't know what the number is, Tom, but I'm looking at the relative performance to help determine that.
Andrew, let's build on that and apply it to the financials. Bank of America did some work on this recently. There's a difference between what the yield curve means for profitability for earnings and what the yield curve means.
Good morning, traders. How are you today? I'm going to place order. Please place your order for euro at 109.84. Okay? Order placed to buy at 109.84. This Forex spot. Okay? Follow the strategy you have, and you know what to do after you will get filled this order. Okay, guys? I'll speak to you later.
When the first invasion happened and there was a flight to treasuries, what happened to the banks? They got crushed, and maybe that's because of exposure and so forth. But I think it's because the yields dropped. So I hear what you said. I agree with that, except the correlation of stock price performance remains correlated to that yield curve.
And perhaps it always will. Andrew, you're going to stick with us. What a day we've got coming up. We're lucky to have a second segment with Andrew Sliman and Morgan Stanley. Tom, for earnings, the yield curve doesn't drive earnings like it used to for the banks. But for investor appetite for multiples, it still does. And you can sit there and write your reports and push back as much as you want. But to Andrew's point, you look at what the market does off the back of it, and it's still very much the story and has been for a while.
Corporations can adjust, John, but you're right in that it's multiple behavior, and a multiple is a numerator and a denominator. And whichever one you're looking at, it's about growthiness up top in the numerator, and the denominator is a belief in margins, a belief in prosperity. And there is a consensus that those margins come in. To pick a number 22, does the multiple come in to 20? Or to 17, and that's a big difference, and that's sort of the market guess forward.
We'll continue on that. Kaylee, can we pick up on these headlines out of Germany that we touched on 5-10 minutes ago? The German example this morning, whether it's going to be replicated across Europe in the weeks to come.
Yeah, cutting the fuel tax to the minimum by 30 cents. They're also going to give everyone 300 euros in reimbursement, essentially, for higher energy costs. We're also getting a headline now out of the German Association of Energy and Water Industries, BDEW, basically saying that there are signs now that the situation is going to deteriorate. The gas supply situation is about to deteriorate, given Russia's demand yesterday that hostile nations, including those in the European Union, have to pay for that gas in rubles. How do you do that, given the current sanctions?
That was the message, Tom. Pairs in rubles yesterday, and the Europeans, let's say the Europeans are not on board.
Yeah, I know Damien's coming up to make us smarter on this. 95 under 100 on ruble. John, I just don't buy it. I just don't see the world trading in rubles.
Pavel Molchanov is going to join us too, Tom. He's going to join us on all of this, on gas, on crude, from Raymond James. We'll do that a little bit later this morning, 7:45 Eastern Time. look at this move in yields, up 8 basis points again on 10s, 237, 54. Welcome back, Tom.
Okay, guys, as you can see, position open on euro at 109.84. Stay with me, and we will close this trade in profit. Okay, for new guys who want to get the strategy, please go to company.co.uk and you can purchase the strategy from there. Speak to you later.
going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Busy day in Brussels for the President of the United States. A NATO meeting right now, then onto a G7 summit, and later an EU meeting as well. EU leaders convening in Brussels. Ahead of all of this, futures positive by 0.5% on the S&P and the Nasdaq as well. SocGen reduced their exposure to equities, and they say the following: we're entering a more dangerous phase, a more dangerous market cycle. We'll build on that a little bit later. For Russia, can we call this a market? We can discuss that. Let's discuss whether we can call this a market. Foreigners can't sell, short selling is banned, and the wealth fund is willing to prop this stuff up. The Russian equity market reopens after being closed for a single month. It's up by almost 5%. I believe it's open for about 4 hours. That's the story right now in Russia. Here's the story in the bond market. 2s, 10s, and 30s. I want to sit on 10s for a moment. Closed out last month in the 180s, back to 237.54. Steve Major of HSBC, Tom, making a call. He goes to 2% year end from 150. Got a mark to market here, seeing a big move up 8 basis points. And it's not just market to market. The story's changed in a big way in the first quarter, Tom. This is not the year people were looking for just 3 months ago.
Yeah, it is. And what you do on the Bloomberg terminal, John, is you look at the standard deviations, which I know is a little esoteric. And the answer is we moved hard and fast, as you mentioned while I was gone, John. And out the standard deviation out is 2.45%. We're not there, almost up near the highs. And the lows are way down, Steve Major, like 1.62%. There's a huge spread right now.
Look at what we've had to do across the world, and use the UK as an example. We've had to kick higher the outlook for inflation and slash the outlook for growth. The UK has gone from a 6 handle down to 3, Tom. Just like that. Gone from 6 down to 3. That's a big change in the outlook.
I'm going to suggest, John, into the summer here, the politicians could care less about the Bloomberg quotes. They're looking at real wages and the middle class crushed. I see that nation to nation.
Consumer confidence, Tom. We get it from you, Mitch, here in the United States. Decade lows. It's been a story for a while.
Yeah, absolutely. Let us continue here. We've got a real treat. Rarely do we do this, and we do this with a wonderful person. Andrew Sliman joins us, Senior Portfolio Manager at Morgan Stanley, to continue our conversation. Andrew, thank you so much. A generous amount of your afternoon as well. Andrew, I want to talk about the idea of a pullback and what it means to the banks. There's a raging battle over the banks. Ben Laidler over at eToro says, look, they're going to be able to have cash return. They're going to be able to wade through this. Do they manage their way through this? Is there some secret sauce the bank sector has?
I think they will. I continue to be overweight this area. I think they will because I know this is controversial, but I think the 2-year actually could come down later this year if inflation starts to subside, which I think it will in the second half of the year. So I think the surprise is going to be the yield curve actually re-steepens because we have lower inflation. So in that environment, I think you'll get a return to, the bank stocks. But in the meantime, I'm a long equity manager. Where am I going to get exposure? Well, I know that as the 10-year goes up, long duration, tech-oriented, high-growth stocks don't do as well. I'm betting that the banks will outperform that area of the market.
Here's a question, Andrew, I don't think I've asked in 8 years, maybe, and here it is right now. Do corporations have the ability to cut costs?
Well, that's a fast. This is going to be very interesting to see what happens in the first quarter earnings reports, because as much as, you and John just talked about slowing growth, weaker consumer confidence, et cetera, we haven't actually seen the bottoms-up consensus estimate for the S&P come down this year. It's actually gone up every week. So it will be interesting to see if corporate earnings are, or the outlook for earnings in the first quarter reports actually bring down those estimates. Can companies cut costs? We'll have to see. So far, haven't seen signs of that.
Well, Andrew, there's a narrative out there now when people were looking for an answer as to why equities would have rallied 5% in the days following a hike and hawkish commentary from the Federal Reserve. And it developed into equities can act as an inflation hedge because these companies have the ability to pass on those costs, exercise that pricing power. Do you buy that argument?
Well, so far it's been true. I mean, the margins are high. The margins have not come down. And I've been hearing this over and over from, the strategists that margins are going to get crushed. Earnings are going to get hit hard. And yet these reports come in and companies pass on. And when we talk to companies, they seem very confident. I'm shockingly surprised how confident companies are in their ability to pass on costs. Oh, we're going to pass that on. So, we'll have to see. Look, I'm not in the business of trying to predict. I'm in the business of buying, good fundamentals and companies that are doing well. And I push back on this doomsday scenario because I haven't seen it happen yet.
Andrew, that's the second time you've made this point that maybe people in this market are getting it wrong. The analyst community, the strategists, you seem to be pushing back against that. What do they say back to you when you push back and you hear them say these things to you?
It's coming. It's coming, Jonathan. The companies are about to miss. Just wait a second. It's going to happen. I've been hearing it's going to happen now.
Is he auditioning for the show, John? He just says anchor to me.
I think guest host.
I hear this over and over. So look, I'm not paid to be interested. I'm paid to be right, and I just push back on that scenario because when I talk to companies, I don't hear the same thing I hear out of, kind of the Wall Street community.
I look, Andrew, at the view forward, and some of it is look over all of this. Look over this war. Look over this diplomacy. Look over this 2022. What do you do with money with a 2025 perspective?
Well, look, I mean, okay, so the market's down 10%. You said, Jonathan, you started by saying, it's been an unusual year. And what I would say is, no, last year was unusual. We didn't have a 10% pullback. We usually have a 10% pullback once a year, and we didn't have one last year. It doesn't surprise me we're having one this year. You fill in the narrative what caused it, tragically. I think it will morph to 50. I think we'll get down to 4,000, 3,800 before it's all said and done. But I know that when you get 10% pullbacks, even if they get uglier, that's a good time to put money to work. And if you get down 15%, which is, 4,000, 4,100, that's a better opportunity. So I think looking out to 2025, these are the opportunities you have to take advantage of. Now, you guys know that down 5%, everyone wants to buy the dip. Down 10%, most people want to buy the dip. Down 15%, people start to go squeamish. And that's just the reverse of what sets up for better opportunities. The more the market drops, the better the forward opportunity presents itself. I think you got to be prepared that we're going to have another dip here, and you got to put cash to work. And what we're doing, and Tom, you always ask me, what are you raising cash? And I'm a long equity manager, but I have some cash, but I also have a lower risk profile in portfolios right now than I would if the market was down, around 4,000.
Well, talking of opportunities, Andrew, I take a look at just the sector breakdown this year. Everything is down, the exception being energy, which is the better part of 40% year to date. Is it too late to find an entry point in energy?
Yes. Look, I think you want to have some exposure. But, I've got, some gray hair here. Maybe I've just been around this business.
Oh, here we go.
But every time energy is going to, $150, $200 or whatever, no, it never works out, and so, it's the demand supply. And I understand we have a supply issue, but demand always contracts at some level. And I think that will be the case again. So you just want to have just enough energy exposure not to really hurt yourself, but to pile in aggressively here. You're late to the game, and I think you're vulnerable at some point to the inevitability of commodity corrections, because they all have.
Andrew, just quickly, can we finish on energy just with another comment? These quarterly earnings, how controversial will they be for some of these names that don't have the big Russia write-downs? Do they report the big profits, then run away and hide?
I mean, look, if you're a CEO and you report, you look forward to having a great quarterly earnings report and be able to say how great you are, except if you're the CEO of an energy company and then you're just, oh boy. I mean, they're in a no-win situation.
You're the piñata over in Washington, D.C. in a big way. Andrew, this has been special. Thank you. Andrew Sliman there of Morgan Stanley. Tom, can you imagine? We touched on this yesterday when you were away. What's that going to look like when those big profits come through for the first quarter? Do they just issue that statement and then run off?
No.
A
really important question, John. I followed Adobe yesterday while I was waltzing across the Atlantic. Thank you, United, for a great flight. Francine had the Gulfstream. And John, the answer is look at Adobe. They came out, they beat, but their view forward was a little light and the stock got hammered, I think, 10%.
I'm looking at bonds this morning, Tom. Up 8 or 9 basis points on 10s. Just looking at Germany. Yields high there by 7 or 8 basis points through the curve.
I'm looking at commodities where I'm seeing metals up. Yeah, ags are okay and flat, but I'm sorry, we're going to get a breakout in the Bloomberg commodity. John, drawdown. We haven't done this since I left. I'm sorry. Drawdown. It's horrific. Standard & Poor's -7, Dow 6. Oh, that should be a negative 12%, and that's my fault. That was a Tom Keene typo. NASDAQ, -12%. John, it's carnage.
That's where people wish the NASDAQ was, Tom.
Yeah.
In part of the market, though, Tom, and away from the index level, below the index, it has been carnage in places.
Yes.
It's been brutal.
Yes, fair.
You know it has.
Profit matters. Magnum Desai, LSE.
What do you think of the Andrew Sliman look? Jacket gone.
It's just great.
Work?
I feel,
We'll go jacket free, Tom.
I got 47 tweets. Tom, don't take your jacket off.
You're not going to join in the Andrew Sliman look. When we work this out and get some aircon in. That works. Purple line in TK. Where's that from?
Everyone's different, so I know. This is for the middle daughter. This is for Prada.
That's
Prada picked this one out.
Prada picked that one.
Yeah, Prada picked this one out.
The middle daughter is now called Prada.
Yeah, there's the middle. It's confusing. There's the middle child. There's not the middle child, and then there's Prada, and then there's Afterthought. Medium wall is cash flow.
That's right.
Yeah.
I know cash flow. I've met cash flow a few times.
Yeah.
Futures up 0.5% on the S&P. Yields higher by 8 basis points. 237.54 on 10s. A big day in Europe for the president.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden and the group of 7 nations have a warning for Vladimir Putin at their meeting in Brussels today. In a draft statement, the G7 tells Russia not to use nuclear or chemical weapons in the war with Ukraine. There's been concern that Putin may resort to drastic means if his troops keep getting bogged down. The highly respected governor of Russia's central bank wanted to resign after Vladimir Putin ordered the invasion of Ukraine, but Bloomberg's learned the president ordered Elvira Nabiulina to stay. Nabiulina was nominated for a new 5-year term at the bank last week. BlackRock CEO Larry Fink says the invasion of Ukraine has the potential to speed up the global shift to green energy. He says it may also do the same thing for digital currencies. Fink made the observations in his annual letter to shareholders of the world's largest money manager. The Senate Judiciary Committee is expected to vote April the 4th on the nomination of Judge Ketanji Brown Jackson to the Supreme Court. On the second day of questioning, Jackson again defended her record on sentencing criminals and explained how she decides cases. Jackson's confirmation as the first black woman on the Supreme Court is all but assured because of the Democrats' control of the Senate. And the World Bank has priced the world's first wildlife bond. It's raising $150 million that will be partly used for the conservation of black rhinos in South Africa. The 5-year bond will pay returns determined by the rate of growth in populations of the animals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
We meet here at the NATO headquarters, facing the most serious security crisis in a generation.
Vladimir Putin has already crossed the red line into barbarism, and I think it's now up to NATO.
This illegal, brutal invasion of a friendly democracy in Ukraine by Vladimir Putin is absolutely unacceptable.
Global leaders coming together in Brussels for a NATO summit, then on to G7, then after that, an EU summit as well. Futures this morning, and good morning, up 0.5% on the S&P. On the Nasdaq right now, up 0.5% also. The move we're seeing in this bond market, just massive again, up 9 basis points, 237.91. That's the move on 10, seeing a move in the gilt market, the bond market, yield tower across the board at the front end of the curve as well on 2s, up 6 basis points. Bit of steepness coming through actually, 215, 216 on 2s. Tom, just quickly, I want to talk about Russia too. The Russian equity market reopening after a month. What you can't do is important. Foreign investor can't sell, okay. You can't short sell, okay. And the wealth fund's willing to step in. This sounds very China circa 2015, 2016. But this is what we've got, Tom. Can we call it a market?
Well,
I guess we can call it a market of sorts. We're up 5%.
we can rip up the script. We do that with Damian Sassa, our Chief Emerging Markets and Flow Strategist for Bloomberg Intelligence right now. Damian, there's 14 ways to go here. Let's go where John took us, which is this idea of false markets. For a portfolio manager in the real world, how false is the broader Russian market right now?
Well, the Russian equity market, I mean, Jonathan just nailed it on the head. It is not reflective of a clearing price. You've got the sovereign wealth fund in there buying, can't short sell, and foreigners just are banned from selling outright, right? I think what we have to kind of focus on is the currency market, right? Because the currency market has come back.
That's a litmus paper of the system.
That is the only thing that we can really look at, right? So I think what you said is right. I think you have dollar ruble now trading under 100. What that's telling me, even more importantly, if you look at the repo market, Russian banks who have been going to the central bank because they have reserves, and they basically need to borrow in the repo market in order to replace their lost deposits, you're now seeing that roll over, which means their currency market is actually reflecting reality a little bit more today than it was only a week ago. People are transacting in it. It speaks to everything that we're hearing about oil and gas flows going back and forth.
In the repo market, which I call the short-term trust market, is it a domestic market now?
Absolutely.
Or is there an international repo market to gain trust overnight in Russia?
No. It's purely for local banks who have to basically replace lost deposits from the central bank of Russia. And what we saw was immediately that spiked, reminiscent of post-2014 annexation of Crimea. That's what the Russian banks had to do then when they were last sanctioned. Now what you're seeing is the same thing, but it's rolling over. And that rolling over tells me everything I need to hear about dollar ruble and the use of it by the Chinese, by the Indian, by non-sanctioned countries, and the fact that that's allowing Putin to basically demand that gas payments be denominated in ruble, which is something that we're going to see in the next few weeks.
Well, Damien, let's talk about that, and maybe euro-ruble is the appropriate currency pair to be discussing.
Absolutely.
How do you expect that to play out?
Well, I mean, look, the fact of the matter is, if we are sanctioning all purchases from Russia in dollars, euro, yen, you name it, they have no use for hard currencies anymore, Jonathan. So, of course, they're going to demand ruble payment, and they can use those rubles to pay for things that they need from China and India and other non-sanctioned countries. And that's why, and I've been saying this since the very, very beginning, that these sanctions aren't going to work if China's not on board. And as it stands right now, it just doesn't look like they're going to be coming on board anytime soon.
Okay, so we can talk about the Europeans' ability to pay Russia in rubles. We can also talk about Russia's ability to pay rubles to pay off some of its creditors when we talk about the bond payments. Where do we stand on that, Damien? What answers do we have?
We don't have much answers since yesterday, Kelly. Severstal, Citigroup is still waiting for that OFAC sign-off in order to remit the payments to the underlying creditors. But because Severstal, which is the major steel producer in Russia, only has $16 billion, I think their offshore holdings only account for 16% of the unsecured dollar debt outstanding. No one wants a default there. So, I think creditors are going to work with Severstal to prevent that default from happening. I think we have to take a step back. We have to look at the impact on fund managers here in the U.S. because you make a really good point. Now that dollar ruble is trading, think about this for a second. If you're a foreigner holding Russian local denominated bonds and you can't take your money out, those bonds are going to keep paying coupons. They're going to keep paying off. So you're sitting there with effectively a cash position in rubles, which you can mark, But what does that do to your broader portfolio? I mean, your duration effectively goes to zero for your Russian holdings. It means they're going to have to take more duration risk in other countries. And so these are the kind of things from a portfolio manager's perspective you got to think of. I mean, ETFs can't side pocket their assets. It's not legal today. That may have to change in lieu of all we're seeing in Russia. It's really quite unprecedented.
Damien, the dynamic that you just described, do you think we fully realize the ripples, the consequences of that?
I mean, I think portfolio managers, at least the ones I'm talking to, are just now realizing what it means for their broader portfolios, right? They're trying to work with, I guess, their policy basically seeing, can we side pocket these assets, strike a NAV, put them in a separate portfolio, park them there and just leave them there? You might be able to do that, sure, in some instances, but in most instances you can't. So really what you're seeing, and these are the equity and ETFs now, equity holders and ETFs, Jonathan, they're either selling ahead of that May 25th deadline, selling aggressively to whoever will buy those shares, and any residual that's left over, you're left holding the bag.
Damien, what's the leverage update? What's the carnage out there right now? Use of leverage.
Well, I think Duke isn't going to do very well tonight against Texas Tech, Tom. I mean, I think that's. Look, you know, they may be a
Killing
2-seed, but
you saw where my bracket is.
I'm beating you, Tom.
You are, but my final four is still intact. So, given how little I know about all of this, I'm looking at my bracket.
What's the carnage on the street right now?
The carnage on the street. So look, I think really if you have to look across the whole of emerging markets, and they've been ahead of the developed market complex in terms of where their curves are and what that's telling us about the future, the stagflationary impact, because what we're seeing in Eastern Europe and Brazil and Chile and Colombia is a massive flattening of most of these local yield curves, right? We haven't seen that in Asia because the inflation impulse is just not as strong. And so if you look at Asian curves, they're actually quite steep. And I think you're going to see a lot of that change over the next few months. I think you're going to see paying in the front end of some Asian curves like Malaysia, Thailand, the Philippines, as inflation sort of kicks in.
Damien, take a look at the radio. This is really important, and that Pharaoh's gone all cash today. And I sort of buttoned it up, and I'm going like a more formal kind of
I'm not sure if I like the buttoned up look.
I mean, you know,
Jonathan looks good. He looks like he's been working out. He's got the delts. The
just getting ready for summer.
And I don't.
You know how this works. You know the cycle.
That's good. That's good.
Gonzaga. I've got Gonzaga, Damien. How's that going to work?
I like Timmy. I like Gonzaga. I do.
Against Arizona.
I think that's a good one. Against Arizona, that's what I had too. Yeah.
I thought you had Purdue, Tom.
No, I can't. Purdue can only go so far. I lie about it. I say I've got them all the way.
So you cheated on management. You tried to please your manager.
I'm trying to go both ways here. No, I got Gorgonzola. Abramowitz helped me with my.
I've got Gonzaga, UCLA, Arizona, and Kansas in my final four.
They're all still alive.
I got Kansas, Gorgonzola.
I'm still in the mix. Just I need to be.
I like Gorgonzola.
Yeah.
Gorgonzola
Jamie
cheese.
did this. Producer Jamie did all
in
of
my
this.
olives, like when they stuff olives, he put in martini.
Damien, thank you. Enjoyed that. Damien Sasso there of Bloomberg Intelligence. Tom, on what is a market and I guess what is not a market. This coming in from Poland. Kaylee, will they pay in rubles for Russian gas? The answer?
Not possible. And I wonder how much of the European Union is going to follow suit. We heard something similar from Mario Draghi yesterday. Italy not inclined to do so.
Seems to be the direction of travel, how this plays out through the next few days and how this US administration can assist in reducing the European dependence, Tom, on Russian energy.
John, when I was gone, we went straight up in the stock market. Do we know why?
No. And we spent a lot of time asking Tom from New York City. This is Bloomberg.
What happened?
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a third dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The Fed is very concerned that they're behind the curve, that they've waited too long.
You're seeing the Fed put the classic trial balloons out there and say, hey, what if we did go 50?
I think there is a significant risk of a hard landing. And since we're being blunt, let's say the word recession.
If Powell is as hawkish as he's trying to make us believe he will be, a recession isn't far-fetched.
We're going to get a recession at some point in the next few years. The question is, when?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Katie Lyons. I'm Jonathan Ferro. Futures up 0.5% on the S&P. Tom Keene for the president. The week begins right now.
Yeah, the week begins right now, John, and it's on diplomacy. But I really want to emphasize this, John. While the diplomacy is going on, including the headline that we got the U.S. to welcome up to 100,000 fleeing war, that according to NBC, is an exceptional blast on the Black Sea right now. Fox has the video, the Times of London reports it, AP reports it, and in some way, the Ukraine Navy says a ship blown up. The headline to me, John, is the war continues as the suits and ties meet.
3 issues at play here, Tom. Let's pick 3 of them. 1 is combat, the risk of chemical warfare by Russia.
Yes.
2 is China, their role in all of this. At the moment, that's open to debate. And 3, the energy dependency of Europe on Russia and what the US can help them do. Over the next couple of days, can they agree on something big?
It's interesting, John, is how those are 3 disparate parts. And to your point, and you've mentioned this twice this morning, the chemical warfare issue is germane because right now, I'd say, John, correct me if I'm wrong, in the last 48 hours, there's been constructive Ukraine war news, and you wonder what that means for Mr. Putin.
Keep an eye on the headlines as they come in. Katie Lyons, we've seen a few already. Vladimir Putin requesting that the Europeans pay for Russian gas in rubles. The pushback building over the last 24 hours.
Yeah, we saw the pushback starting already yesterday when Italy said it is not inclined to do so. Now Poland coming out and saying their state-owned energy enterprise saying that is just simply not possible. It raises the question of what Europe is going to do. Maybe it just accelerates the push to wean themselves off of Russian natural gas. And of course, that's something that the U.S. is going to try and firm up today, John.
This NATO summit, Tom, wraps up in about an hour. Then it's on to the G7 and then, Tom, onto an EU summit.
Oh, they're doing the rounds, and John, it's a shock to me how this is such a different NATO than the NATO you and I knew 6 months ago or 6 years ago. There is something new here. But what are we going to get in the statements, John? Is it going to be the same old, same old?
Well, they've had two shocks now, haven't they, Tom? The former president saying, let's get it together, let's spend on defense in a massive, massive way, and don't rely on us too much. The second shock, Russia, opened the Europeans' eyes to the threat on the doorstep in a massive way. And I think what the president has done this time around, Tom, and I've said this a few times and I think it's worth repeating, instead of embarrassing his allies publicly, he allowed his allies to embarrass themselves. And they've had to turn around, Tom, and do a massive 180 on some big issues.
To me, the imagery here of the President of the United States across the Atlantic, I know it's timeless, I know it's historical, but John, there's just something different when the President of the United States shows up. The dialogue changes.
And we'll keep on top of the dialogue. Through today on Bloomberg TV and radio. Let's keep on top of the price action as well. Equity futures with a lift on the S&P, on the NASDAQ, up 0.5% across the board here. Yields higher too. Look at this. We are facing another 10 basis point move on a 10-year Treasury, Tom. 238.82 on 10s. Yields up across the curve. Yields up around the world.
Yeah, commodities up as well. I know nickel up, John, this morning. Copper up. I looked at LME, which I know you look at, and the answer is not out to record highs, but Bloomberg Commodity Index really buttressed up there. Look at Brent crude, 122.
Look at WTI, Caddy Lines, 114.63.
Yeah, a lot of volatility, but a lot of commodity traders also warning about the lack of liquidity in this market, which could be exacerbating all of the moves in either direction. Now, as we've been talking about, big day for geopolitics, back-to-back summits with the president in Europe. The NATO summit already underway at 9:15 Eastern time. We will be getting the G7 leaders summit followed at noon by the European Council summit later today. The question is, are we just going to see statements, words? What about action? We will wait and we will see. We also await data here in the U.S. We get jobless claims, durable goods at 8:30 a.m. Eastern time. Does it even really matter to a Federal Reserve that seems pretty much dead set on a 50 basis point move in May? That is what we have heard from a chorus of Fed speakers. Have we heard enough from them? The answer is probably no, because we get more Fed speak later on today. Throughout the morning, Neil Kashkari, Christopher Waller, Evans, Bostic, all four of them will be speaking by 11 a.m. Eastern time. Again, 50 basis points. We understand it's on the table. So what else do we want to hear from them, John? Will we get more discussion about how the balance sheet factors into all of this?
Kelly, thank you. In Brussels, team coverage this hour begins right now with Anne-Marie over in Brussels alongside Maria Tadeo. AMH, the president, this administration, very transparent about two issues on the table. One is the risk of chemical warfare. The other is China. How does that come together through the next 24 hours?
Well, John, let's first start with the risk of chemical warfare. The president said this was a high threat as he left the White House en route to Brussels overnight. And then, of course, the G7 draft that Bloomberg has seen a copy of talks about the use and the threat to President Putin and warns him if he was to use chemical or biological weapons. Now, we should remember President Putin provided air cover and supported Bashar al-Assad in Syria when he used chemical weapons. He also used Novichok in Salisbury, United Kingdom. This is something that the Western leaders are very much so aware that President Putin would technically and potentially come to and divert to. The issue is, Jonathan, is we don't know what those, quote, severe consequences Western leaders have talked about would actually be. And when it comes to China, Jonathan, I imagine what you can see here is there's going to be leaders that want to implore China to first come out and condemn what is going on. China has yet to do that. And then put China on guard and warn them that they cannot help Russia when it comes to skirting around sanctions, also providing military support to President Putin. What's really key right now is the president, it's the end of March, is in Europe ahead of a key EU-China summit April 1st. Today is all about making sure the messaging and the actions that could follow on China all line up.
Maria Tadeo, please tell us the military momentum, if any, that Ukraine has at this moment.
Well, Tom, of course, a lot of this information is not made public, and the Ukrainians are always very secretive about the equipment that they have, that they've used, and that it's been destroyed in this fight with Russia. A lot of this, I should say, the secrecy around the military operation has gone in crescendo over the past week because it really concerns the Polish government. Remember, a lot of these weapons have to go through the Polish border. Poland, at this stage, is the biggest distribution hub of weapons into Ukraine, and many of the European officials officials that I speak with now say the best thing we can do, it's for everyone's safety, is to just stay quiet and not reveal a lot of this. Remember, at the start of the crisis, because everyone wanted to show solidarity with Ukraine, they all revealed this is what we're sending, this is what we're going to send it to, and this is how it's going to get to Ukraine. But then that made Poland a target for the Russians. If you watch Russian TV every night, Tom, which we do here, they always say this, the Polish government should better watch out because they do not or should not get involved here. Otherwise, they're going to have a problem with Russia. So a lot of the military operation in Ukraine, Tom, is now very secret. The one thing that's very open and the Ukrainian government continues to say is that they are not going to surrender their major cities, not even Mariupol. Remember, there was an ultimatum that was put forward by Russia on Sunday saying you have to give up your weapons or it will be a trial by a tribunal. The Ukrainians said, we're not going to do it. The fight continues.
Well, and on that point, Maria, Greg Valliere over at AGF Investments in his note today said the question is also whether or not NATO is going to push Vladimir Zelensky to accept a deal that he may not want to. Is either Ukraine or Russia looking like they are ready to accept some sort of peace deal? Is either one willing to cave on anything at this point?
At this point, the clear answer to that is no. When you look at the situation, the special military operation that Vladimir Putin refers to, at this point, he's gone in too deep in Ukraine. The Donbass is not good enough for him. And Crimea, if we're honest, everyone in the real politics of things already knew that this kind of belongs to Russia. They're not going to get it back to Ukraine. So that is not enough for Vladimir Putin to say we have the Donbass and Crimea. He's gone in too deep. When it comes to Ukraine, well, they'll tell you, no, we don't want to do bilateral deals with Russia. We still believe we have momentum to stop them. So therefore, what you see is that the two sides are just trying to really build up their leverage before the real talks begin. I have Ukrainian officials that tell me nothing's really going to move until the end of April. So if you think this war is just a matter of days, actually, in fact, when you look at the Ukrainian psyche, they still believe if they get the weapons, they can go on for longer. And the longer it goes on, it could actually help the Ukrainian government because it will tire out the Russians on the ground.
Maria, thank you. Maria Tadeo, alongside AMH in Brussels. Tom, what a busy day we've got coming up. Worth repeating, the President and allies in a NATO meeting right now, that summit ongoing. They had an address by President Zelensky of Ukraine. After this wraps up, about an hour from now, they'll go on to a G7 summit. From there, Tom, an EU Council meeting, a leaders summit a little bit later.
The diplomacy here is wrapped around globalization and the markets. The markets speak for themselves, and we'll give you that data all day. I do want to point out, John, a wonderful essay by John Micklethwaite and Adrian Wildridge on the similarities here to World War I and the differences to World War I. And what they talk about here, John, is something that I think Prime Minister Johnson has a unique feature of, and that is Maynard Keynes in 1919 talking about the permanent, and the permanent of 1914 that was shattered forever. The idea of the normal, the certain, the permanent, gone.
The history that speaks to today in some ways. Hearing from Dmitry Peskov of the Kremlin is saying the following, Katie: Russia regrets Ukraine being, quote, slow at talks, according to Interfax just moments ago.
Yeah, continually putting the blame on Ukraine for talks not making substantial progress. But it feels like we are now hearing this almost every day out of the Kremlin, slow progress on these talks. And it speaks exactly to what Maria was just telling us about how long this could go on before either side gets to a point where they're willing to give in.
The Security Council discussing the economic situation with the president of Russia. And Tom, that situation, what do you think of the theatre in the equity market? That's not a mistake, is it? To open the market in Russia today after being shut for a month, with all the restrictions around it, to almost ensure an up day, just as leaders are meeting in Brussels to talk about Russia and sanctions.
Global GDP, United States, 24% of global GDP, Russia, 2% of global GDP. That from the Bloomberg Quick Take this morning. You know what, John? It's about commodities, and they are moving higher.
Crude this morning approaching 115, just short of that, unchanged on the day. Yields are moving higher, much higher, up 8 basis points to 237.54. From New York, heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden and other members of the Group of Seven will issue a tough new warning to Vladimir Putin today in Brussels. According to a draft statement, they'll tell Moscow not to use nuclear or chemical weapons in their war with Ukraine. The G7 also plans to say it will fully implement the sanctions that countries have already imposed and are ready to impose more. The UK is out with its own set of 65 new sanctions on Russia. According to Foreign Secretary Liz Truss, they target strategic industries, banks, and business elites. Also on the list, the world's largest diamond producer. Truss said those sanctioned are, quote, complicit in the murder of innocent civilians, and it is right that they pay the price. Meanwhile, the US and European Union are close to a deal to slash Europe's dependency on Russian energy. An agreement may be announced as soon as Friday. President Biden's National Security Advisor Jake Sullivan says there will be a surge of U.S. supplies of liquefied natural gas to Europe. And Kim Jong-un has finally abandoned a testing freeze on intercontinental ballistic missiles. North Korea launched its first ICBM in more than 4 years. It went higher and farther than its last test back in 2017. South Korea says the test violated UN resolutions and Kim's promise to hold off on such launches. And more turmoil in the nickel market today. The price soared by 15% exchange limit for a second day in London. That puts more pressure on traders holding bearish positions following an unprecedented short squeeze earlier this month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Tuesday, Bloomberg Technology is live from the Shop Talk conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage X Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
Will absolutely confirm what Chair Powell's confirmed for himself, which is that I have everything on the table right now. If we need to do 50, 50 is what we'll do. If we need to do 25 in balance sheet, that's what we'll do. But the data will help us determine how much is necessary.
That was Mary Daly of the San Francisco Fed from New York this morning. Good morning. Futures shaping up as follows. Up 0.6% on the S&P, on the Nasdaq up 7. We're up 8 basis points on 10s to 237.54, and we're taking a little look at what is happening in Russia. Severstal, the steelmaker, unable to pay its coupon in time within a 5 business day grace period. Now, Tom, we've got to be very careful with our words, so I'm going to read out the story verbatim. Severstal said it's keen to pay, but Citigroup, acting as a correspondent bank of the unit issuing the debt, is blocking the payment. A person familiar with the matter said Citi asked the company to get permission from the U.S. Office of Foreign Assets Control before it could remit the cash, but neither the firm and its controlling shareholders isn't sanctioned by the U.S. So, Tom, this is really, really interesting. What is going on here? Here's a company that says we have the money, we want to pay, but we can't pay. Is that a default? If you haven't received that cash, but they want to pay and they're saying they can't get the money to you?
I would say it's a war, but the symbolism here, John, is something. This is literally out of Dr. Zhivago. This is steel from the 1930s, the time of Stalin, taken out, made public by Yeltsin, etc. And the reason Americans know this name is these are the people that bought Rouge Steel, which was Ford Motor. They were bankrupt, and the Russians came in and picked up Rouge Steel, and that's a really emotional thing, John, for the Midwest of America.
Can I bring you the quote from the CEO? Because I think all this language is important. This is an extraordinary situation for us. We continue consultations with partners and do our best to ensure that bondholders receive funds in accordance with the terms of the bond issue. I hope that this injustice will be resolved soon and the rights of bondholders will be respected. Is this a credit event, Tom?
I don't know. I'm not qualified to make that decision.
No, it's not for us to say. I mean, I'm asking that question not because you can answer it. I just think that's the question to ask.
What I would say, and this maybe is my travels to Paris here in the last week, John, it's real simple. There's a whole body of people out there that think of Ukraine as over there, and it's not a war or a war of nations or a war of regions and sides. And there's another reality, which is the war is literally ongoing as we're on air. There's a war, and you run into credit events like that in a war.
And this could be one of them. Severstal, the first Russian firm to run out of time to pay a coupon on its debt.
Let us continue here. We continue, of course, with the President of the United States in Brussels and on to the G7 as well. Sebastian Page joins with T. Rowe Price. Sebastian, real simple, and you're the perfect one to speak to on this. For you, can it be business as usual?
No. I think the market is underestimating the impact of what's going on right now. You know, the S&P 500 is up about 4% over the last month. You have an inflation shock that is on top of an inflation shock. And that takes you back to the 70s, and it raises questions. Even though this war doesn't feel like a direct hit to U.S. growth, the implications of the inflation shock can be major, right? People on your show are talking about whether the Fed will be forced to hike faster, higher, just more aggressively. And you have consumer implications. People pay more for gas at the pump, so consumption can be hit. And then you have corporate margins. So right now we're underweight stocks versus bonds. We're still invested in stocks, but we're comfortable being underweight.
Well, to your book, into the larger picture, as we saw with the Micklethwaite-Wooldridge essay for Quick Take, a Big Take, I should say, today for Bloomberg, and it's real simple. On a globalization basis, how do you reallocate international investment out 3 years?
Look, as asset allocators, we look at macro fundamentals, we look at valuation, we look at sentiment, and right now all these frameworks are in flux because of the geopolitical risks. Before this event, before this war, you had non-US stocks where earnings were expected to accelerate more. You had a reopening that was, you had even more possibly pent-up demand outside the US and a strong valuation case.
Yeah.
I think right now it's better to be closer to the middle between non-US stocks and US stocks.
Sebastian, in the environment you're describing, what role does cash play?
I think cash has a role in the portfolio right now. We're short duration, so we're actually short treasuries in our portfolios. And we expect rates to continue to trend up. I mean, you see this morning at over 2.3 on the 10-year. So cash becomes an interesting alternative. Again, we like to be invested. And if Tom's asking about a 3-year horizon, you need to be invested in stocks, in bonds. But pulling back on stocks, and then instead of just buying treasuries, which you would typically do to de-risk, I think cash is an alternative. There are also parts of the credit markets that are interesting to us right now. For example, bank loans, which have minus 30% correlation with treasuries. Here's an asset class that actually tends to do well when rates rise.
Got to leave it there, Seb. Great thoughts, as always. Sebastian Page there of T. Rowe Price. I'm a bit distracted reading through the details of this story with Severstal. It's fascinating. So Severstal, the steel maker in Russia, the first Russian firm to run out of time to pay the coupon. It had a 5-day grace period, been and gone. Here's the detail, Tom. The firm itself does not appear on any sanctions list. The majority shareholder, Mordashov, is on the EU and UK sanctions lists. And in those jurisdictions, sanctions on individuals generally extend to all companies they own or control. The story goes on to say, still because he's not included in any US sanctions, Severstal didn't preemptively apply for a permit from the US Office of Foreign Assets Control, according to a person familiar with the matter. Tom, this is going to be a long, messy process to try and figure out all of these details. And clearly, if you're the bank stuck in between, Tom, what do you do? Cases like this, I imagine you do nothing just in case you don't get a massive fine further down the road.
I mean, you're right. And the key word there, John, is long. I would go back to what I was reading about J.P. Morgan Sr. and Jr. in 1918 and how they tried to extricate J.P. Morgan out of Russia after the Russian Revolution. And the answer is years. It takes years and years to figure out these relationships, and they're all done in court over time.
Damien Sasser of Bloomberg Intelligence, Tom, is going to run back into the studio.
Is he?
Yeah, and break down.
No one briefed me
break down everything about what's going on here. And then we'll catch up with Willie Caesar as well of Credit Sites. So great lineup of what is happening with Russian corporate bonds, debt, and these missed coupon payments. We'll get into that in about 5 minutes' time. Futures up 0.6 on the S&P and the Nasdaq up 0.7%. Yield shaping up as follows in the bond market. Higher, much higher. Twos all the way out to 30. Steadier yields up 7 basis points. 10's up 8. 2's up 5, your 10-year 237.54, and crude just short of 115 on WTI, basically unchanged on the day. From New York, this is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The President of the United States touching down in Brussels, Belgium, in Europe, happening right now, a NATO summit, then onto a G7 meeting and an EU leaders summit just after that. Going into all of this, futures up a 0.5% and some up 0.6 on the S&P, up 0.7% on the Nasdaq. Let's call it up 0.75%. Outdoing all of that, Russia, the equity market there reopening after being shut for a month. Can we call this a market? Foreigners can't sell, short selling is banned, and there's a wealth fund willing to prop up the stocks. Right now, at the close, up by about 5%, a 4-hour trading session. The move on dollar ruble, south of 100, let's call it 96. The conversation around that, the Russian president asking for the Europeans to pay for Russian gas with rubles, the Europeans pushing back. Let's see if we can resolve that issue. Doubtful, later this week. That's the story in Russia. We'll pick up on the Severstal issue in just a moment. The first missed coupon payment outside of the grace period for a Russian company. We'll do that in just a moment. I want to finish on debt here in America. 2s, 10s, and 30s on the Treasury curve. Yields up. 237.36 right now on 10s. 2s, 114.50. TK, we've had a move of more than 70 basis points this month alone on a 2-year yield.
It's a reset. The question is, when does it click in? And the answer is the equity market so far push against it. I mean, that's all there is to it.
That's the cross-asset price action with some single names. There are many. Movers this morning, let's get to them. And say hello to Katie Lyons. Hey, Kaylee.
Yeah, John, many movers indeed. One of them being Spotify, which inked a deal with Alphabet's Google yesterday to allow it to bill its users directly. Analysts say that should make things easier for subscribers to sign up, could benefit the company, and potentially benefit dating apps as well down the line. So as a result, you're seeing Spotify up 3.6%, excuse me, and Bumble, a dating app, is up by about 2.5%. I also wanted to mention Moderna, which announced this morning $21 billion in advance orders for its COVID-19 vaccine for this year. That's up from the $19 billion it had announced about a month ago. That stock is up about 0.2%.